Thank you. Good evening, students. Welcome back after a great Diwali week. I'm sure you all would have also studied during the week and also enjoyed the festivities, met your friends, your relatives, your close ones. And the topic that we have today and in the next class is something very, very, very important. If you remember, students, I had mentioned to you that customs is a very big area of practice, which unfortunately I haven't found much chartered accountants getting into customs. But I will request that those who are ready to do documentary work, compliance work, and are ready to take up more stringent procedural work, for them, customs is a very good area because it is very lucrative. There is tons of opportunity in customs practice. And till now, we were dealing with the Customs Act in particular. Today, we are going to start with something different. It is also part, or you can say not exactly part of Customs Act, but it is something relating more towards the custom law than the excise or any other indirect tax law. Hence, it is part of your customs, though you can say it is also independent. And as the name you can see on the screen, we are going to deal with our foreign trade policy, but not the entire foreign trade policy, mainly relating to what are the benefits, concessions given to an importer or exporter, and how you can take the maximum advantage as a businessman whenever you are involved in any import or export transactions. Most importantly, as I was mentioning about customs, this is another very, very lucrative area. Again, if we can see it is part of customs, I'll say within customs, this is the most lucrative area because in this, you deal with various schemes that are provided by the government for the importers, exporters, and you can get a lot of benefit to businesses. That is why these schemes have a lot of demand in the industry, and a person having in-depth knowledge of this will always have a great stake, a great advantage in the industry. So I'll request that let us all focus more in depth on this particular chapter, our two sessions today and the day after. And most importantly, these sessions here, we have to read each point in detail minutely because as I said, it is not part exactly of customs law or excise law. It is covering so many things. So in that, in order that we get an in-depth knowledge for the purpose of our exams, in order that it helps us get good marks also in exams, and plus it makes a foundation for those who wish to take up this as one of their practice areas. Let us get into the depth of the foreign trade policy. With this background, let me start. But as usual, I would first request you all to maybe, if you want, I can unmute you. And if anybody has any doubts or questions relating to any part in customs, we'll first discuss that. And then I will start dealing with today's topic. So I give you that initial 2, 3, 5 minutes time for discussing your questions or doubts. So you may raise your questions or doubts, students, if any. Anybody has any questions, doubts, beta? Please feel free to ask. You want any clarity about any of the earlier provisions, topics we discussed in customs? Any confusion you found when you were revising those chapters? Please feel free to ask. No? Okay. So if you do not have any doubt in the previous topics, let me now start with today's topic. As you can see, the name is Foreign Trade Policy. Now, this particular topic covers various aspects. One, what are the features of this foreign trade policy, the administration part, and the content of the foreign trade policy, which is very important. Then, the trade facilitation and ease of doing business measures, which are brought in by this foreign trade policy. Most important, under this FTP, what are the provisions regarding import and exports, which simply means what are the special provisions relating to import export, because otherwise we have already studied provisions in the customs law for import export, but relating to foreign trade policy, what are the specific provisions? Most important, this is the main part, the duty exemption and remission schemes. that are there under the foreign trade policy. Most common and the most favored scheme, export promotion capital goods scheme. Just give me a broad, uh, I will give you a broad overview. Detail we are going to study. As we all know, India has been importing many types of machines, which we call as capital goods, because we find that technologically many other countries are much more advanced, and those machines are useful to us in our domestic manufacturing. Now, if there is a person who is procuring these machines to produce the output which the person is going to again export, so for that, the government has come up with this excellent scheme whereby when you are importing the capital goods and you have applied for the scheme, you have complied with all the procedural requirements, you get a specific benefit whereby you will not be required to pay the duty applicable on the import of this machine. Now you can very well understand the impact and implication of this. You are importing a machine which may cost you around in figures in crores, maybe even multiple crores, and the duty component of that would also be running into definitely lakhs or even multiple of crores. Now, if you are not required to pay that much amount of duty, which may run into multiple of lakhs or definitely crores, that will be a big saving for that particular company. And also, this particular saving will be indirectly a profit to that particular company. But it comes with a very important condition that we are giving you this benefit with a condition that you will make a minimum quantum of export in the coming period of 5 years, 6 years, or the extended period which the scheme allows. That is what is called as your export obligation. So if you comply with the export obligation, then you are welcome for this particular scheme whereby today at the time of import, you need not pay any duty. Similarly, we have these special concepts. I'm sure you all would have read about them to some extent in your GST, and also to a major extent you have read this in income tax law, maybe even some other laws. So it is EOU, that is 100% export oriented undertaking, EHTP, Electronic Hardware Technology Park, STP, Software Technology Park, and Business Technology Park. So these are the different special, you can say, status which the government has provided if you are satisfying certain conditions. Now, what is the advantage of getting these status? Again, if you are getting any of these status, you are eligible for many beneficial schemes of the government, and all these schemes are stemming from this foreign trade policy. So see how much vast is the impact of foreign trade policy. And then the concept of deemed exports. So these are the various agenda points that would be covered in this chapter that we are going to start with today. So let me take you to the first part. So in unit 1, we are going to study some basic aspects about the foreign trade policy, as it is something very new to us. Let us first go to the basics of this foreign trade policy, and then after knowing the basics, we will move on to the technical concepts in foreign trade policy. And after understanding that, we'll move on to the various provisions and schemes under the foreign trade policy. So let us start with the first part. Now, in order that we study the foreign trade policy, the first most point comes the origin. So from where do we get this foreign trade policy? Generally, whenever we talk about foreign trade policy, till now it has always been associated with politics. And yes, it is today one of the biggest tools. And since now you would have seen the election results of America, very soon you'll find some major changes happening between India and America as far as the trade is concerned. There would be varied measures. Very soon you'll be finding our Honorable Prime Minister meeting the President of the United States and signing multiple agreements, because the government has also changed, the party has changed, so different parties have different ideologies. So this foreign trade today has become a big tool for even international relationships, and also having a command of Yes, but I think I read it maybe while saying I said wrongly. Hemant, what you're saying is right. It is biotechnology part. I think maybe I said business technology part. You're right. Okay. So I was saying this that today foreign trade has become a very big tool of maintaining good relations with different countries. And also for a country like India, which is today a very big market, we can exploit this particular, you can say, quality of ours to get other deals done in our favor, which our country has been doing in past few years. So you'll find that today in so many things, India is getting a preference at the international forum only because of a very sound foreign trade policy. So this chapter will also help you understand many aspects when you are reading. If somebody is interested in geopolitics and you're reading the foreign trade relations of India with other countries, the changes that are happening in those foreign trade agreements. Also, let me inform you, in your income tax, there is a similar provision which is double tax avoidance treaty or double tax avoidance agreement. That is also part of our foreign trade policy. So see how vast this foreign trade policy concept is, though here we are limiting the discussion only to indirect taxes, hence the income tax part will not be covered over here. Now, what is the basis, what is the origin of this foreign trade policy in India? So we go to the legislative origin, that is the backing from the law from the government. So as you can see, foreign trade policy is a set of guidelines. So basically, what is it? It is a book, you can say, which contains different pointers about giving you certain guidelines, certain provisions, certain instructions, which will help you in deciding what to import, when to import, how to import, and can you make it beneficial. So basically, foreign trade policy, as the name suggests, is a guideline that is affecting the trade between two different countries. Obviously, one is India, one is the other country. So it is a set of guidelines instruction issued by the government which specifies what are the government policies for import export. See, as our relation with different country changes, like today we are having problems in Bangladesh, maybe tomorrow something comes up in Pakistan. India immediately changes their foreign trade policy relating to these countries so that they can utilize this tool, the foreign trade tool. See, foreign trade is a very big tool today in maintaining a good geopolitical relation and also maintaining your standing in the world. So, immediately you'll find that wherever the government wants to tweak some country, they always use the foreign trade. So it is one of such measures, a very strong, you can say, a tool or even a wizard stick that India is having because it is one of the highest population country. Also, it is a very big consumer base. So all foreign countries are interested in maintaining good relation with India because India is a ready market for them. And this is how we use this to settle our other issues, which may be the border issues, which may be some dispute issues, which may be some other issues like if some of our students are stranded somewhere or if some of our person is taken as a prisoner. So we can even get them released or get those students safely into India again using this foreign trade. So see, understand the impact of this foreign trade. Keep this in mind in the background when you are studying the various pointers that we are going to discuss. So its primary purpose is not only to earn foreign exchange. See, that is now past. Earlier, we used to think that all measures that the government is taking is to earn forex. That was a case in 1990s because at that time we had reached a point where few months back Sri Lanka had reached, or even today Pakistan is that we were having very limited forex, which could last only few weeks. After that, we would have become nil in forex. That was a time during 1990s. Today, India is sitting on a very big forex reserve. So today, technically, we are not in a need of foreign exchange as such. Anyways, through our normal trade also, we are having good forex reserve growing. So please understand now that is a matter of past because I'm sure wherever you have read anything about foreign trade policy or anything relating to tax benefits to exporters, the first point that was always mentioned was why we are giving them benefit because we want forex. Now that is not the only point. So that is also reflected in our foreign trade policy because in some cases we are rigid, we are strict. We may be losing foreign exchange, but we are rigid because we want to make a point. We want the other country to come down at our terms so that we can settle some other issues, some other disputes using foreign trade as a tool. So its primary purpose is not merely earning foreign exchange, but also to stimulate greater economic and other activities. Now, which ministry is handling this? It is the Ministry of Commerce and Industry within the Government of India that is in charge of all these things. But as you know, since it is affecting our relations with other countries, then definitely our external affairs ministry, our defense, and obviously finance, all are also impacted, but majorly it falls under the trade and commerce industry domain. Now, today the foreign trade policy that we are studying was last amended, updated in 2023. And from that date, obviously, there are multiple amendments, but the entire new policy we got was in 2023. Generally, it is a policy which is drafted for 5 years, but this policy was introduced as foreign trade policy 2023. And at least till now, we are following the same policy. We have not yet changed the policy. We are expecting that this will get changed in the next year. Maybe during the time of budget, we may come across a new foreign trade policy. But as on date, we are following the foreign trade policy announced in 2023. Now, what is the legislative power or backing? So the power is conferred by Section 5 of the Foreign Trade Development and Regulation Act, in short, FTDNR Act. Please remember this, students, because these are the small pointers which are important when you're writing the exam paper on this topic. Now, what is the main law relating to this? As you can see, the name was here. It is the Foreign Trade Development and Regulation Act 1992. This is the main parent law from which this foreign trade policy and all these things have originated. Now, in exercise of the power given by this particular act, the Union Ministry of Commerce and Industry, Government of India, generally announces the integrated foreign trade policy with certain underlying objectives. What do you mean by integrated foreign trade policy? Integrated means integrating all other ministries also. So they will not announce only relating to trade, and they will not take care of finance or law or defense. That will not happen. Obviously, they have to announce or draft such a policy which will take care of all other ministries also. So that is why it is an integrated foreign trade policy. This policy, few years back, until few years back, was called as EXIM policy. So just keep in mind, if by chance you are referring to some videos of the past or some documents of the past come to you, or some reference of past comes to you, they may term it as EXIM policy. So just remember, what was earlier called as EXIM, that is export-import policy, is today renamed as foreign trade policy. So the act, the parent act, provides for the development and regulation of foreign trade by facilitating import into and augmenting export from India, etc. So this is generic. Now, main part. What is this main part? As per the provisions of this act, the central government, what does the central government do for this? Make provisions for facilitating and controlling foreign trade. So as I was explaining, see, foreign trade today has become a very big tool and is no more limited only from trade perspective or only from economy perspective. Now, foreign trade is used as a tool, as a wizard stick to get our terms settled on various fronts. As I said, it may be border issue, it may be some defense issue, it may be some terrorist issue. Like today, Canada, if you are interested in geopolitics, see how Canada is always taking a different stand or a contrary stand to whatever India is doing or whatever India is saying. They are also promoting a particular terrorist group. Now, in such cases, if India wants to press Canada on this, India will use its foreign trade tool. So wherever India is having any such foreign trade, which has a very big impact on Canada. Like I'll tell you, very interesting. I don't know whether you'll know this or not. A very big number of Indian students are studying in Canada. Now, please understand, students, even a place like Ukraine, I was shocked to know when the Ukraine war started that students in number of lakhs were studying in Ukraine. This I got to know only when the Ukraine war started and when we got the news that so many students are stranded in Ukraine. So understand this. This may appear to be nothing very important, but understand when a student is going from India to study abroad in a place like Canada, how much that student is contributing to that particular economy. So we can always use this as a tool to press that particular country. We may bring sanctions or we may at least Tell them that we'll bring sanctions if they are not regulating the other thing which is troubling us. So this is how foreign trade is used. So what does the central government do under the foreign trade policy? Make provisions which facilitates not only foreign trade but other aspects also. Further, it will make such provisions which may prohibit, restrict, or regulate the import export. Again, these are the tools for getting some other things settled. Further, what does the government do under this act? It will make provisions which will authorize to formulate, announce, and export import policy and also to amend it. So this particular act empowers the government to make this foreign trade policy and also to amend it from time to time. And it is also authorized to appoint a Directorate General of Foreign Trade. Now, remember this name. We will be coming across this name multiple times in this chapter. In short, it is called as the DGFT. Now, as you know, for share market, the regulatory body is SEBI. For all company related matters, the regulatory body is CLB, that is Company Law Board. Similarly, for telecom related matters, it is TRAI. For insurance, you have IRDA. Similarly, for foreign trade policy related matters, the regulatory body authority is this DGFT. So again, under this act, government is empowered to do what? To appoint a person who will act as DGFT and set up the entire DGFT office. Now, these are the major, you can say, provisions which are given in the particular act, empowering the central government to do all these things, which collectively will go for making and working of the foreign trade policy. Fine. See, all these are background. Whatever is important for exams, I'm highlighting. Focus on that for exam, but other things you need to remember, because as we proceed further, these are the things which will come again and again, and that will be helpful in understanding the technical provisions. Now, what are the features of foreign trade policy? So export import of goods and services is generally free unless specifically regulated. Now here I want to make one clarification. When our module or any book says that export import is generally free unless specifically regulated, I'm sure what comes to your mind when they use the word free is free from tax, that is tax free. Answer is no. Here, whenever the book, even the foreign trade policy book or our module or any book talking about this particular topic uses the word that import export of goods is allowed free, it means free means without restrictions. That is what is meant by free. So free does not mean tax free. Free means you don't need to take any permission. Now you will say, sir, what is the opposite of this? I'll tell you. See, there was a time, again up to 1990, till we went for global economy. So till the time we were not a global economy, for everything you needed permission from the government. You needed some authorization, you needed some license. So that was a time when many things were regulated. In fact, I'm sure you'll be remembering this. There was a time when even our petrol diesel prices were regulated. So what would be the petrol price, diesel price? The government would regulate, and many times, actually, maybe the petrol would be costing 100, but you were getting at 60, 65 because the difference was borne by the government because it was regulating the price. Then few years back, the government said, no, Baba, let us make it free. Free means what? Let market forces decide the price. Let each company fix the price depending upon at what price they are getting the crude oil, what is their processing charges. So that is why today suddenly you see the petrol is crossing 100, but that is simply because the government has stopped regulating it and stopped interfering with the pricing. In the similar fashion, there was a time before 1994 when there were so many sanctions, restrictions, regulations, licensing, authorization to do anything because everything was regulated. Then we started opening up. In fact, besides opening up that particular economy, which we call as now India as a global economy, later on in this new century, that is after 2000, we also saw opening up of different sectors. Like earlier, telecom was again only by the government. Railways were only by the government. Insurance was only by the government. Now you can find even private players that in these sectors, or even if there are no private players, but at least in these sectors, private people can invest. So somehow the government has started opening up even these sectors. So that is what is free. Free means anybody now, tomorrow you want to start up insurance company, you can start up insurance company. Nobody's stopping you. Yes, There would be certain rules that you have to follow, that anybody has to follow, even the government insurance company has to follow. So that is fine. Banks also, there was a time when we used to have only nationalized banks, that is the banks of the government run, regulated by government. Now we have so many private, cooperative, Pat Sanstha banks because government has opened up. That is what we mean by free. So today, what is the present status of our foreign trade policy? Export import of goods is free unless regulated by the provisions of any law, or maybe this foreign trade policy also. Now, today our export imports can be broadly categorized as free, means anybody can do it without any permission. Prohibited means nobody can do it, or maybe those may be only imported by government, like certain drugs or certain items of war, etc. And certain are restricted. Now, restricted means they are allowed, but subject to some conditions, restrictions. Mainly the restrictions are you need a prior permission, which is called as license or authorization. There may be limit to value, there may be limit to quantity. So certain items are allowed to be imported, exported, but subject to these restrictions, which you need to satisfy. Further, some goods are free for import export, means anybody can import or export these goods, but can be imported, exported only through state trading enterprise. So you can do it, but you directly cannot do it. You have to use the state trading enterprise route. Now you'll ask, sir, what is the state trading enterprise? That we are going to discuss in detail, but let me just give you a simple example. Like today, if I want to sell a chuda, that is one of the famous items from our state, I can directly export it as Vishal Poddar or as a company or as a proprietorship firm. I don't require anybody in between. However, if I have to send a particular drug or a medicine, let us say a homeopathic medicine, which I have devised, but this medicine, I as Vishal Poddar or a company or a proprietorship cannot directly export. It has to be routed through a specific body, an organization created by the government, which will act as the actual exporter. So we have to go there. We have to tell them that, see, these are our orders. And as good as we have to give our goods to them, and then they are exporting it. This is what is the concept of state trading enterprise. So where the government has created a body which will act as the exporter. So this is the indirect view of government. They do not want to restrict it, but they want to keep a watch. So how they are keeping a watch? They are saying that all export will happen through this body, and this body is a government body. So when you do export through them, what quantity you are exporting, what is the price, in what time you get the payment, in what currency you get the payment, all details at least the government comes from. That is the main purpose of this. So for certain goods, though there is no restriction that you cannot export or etc., but you need to do it through state trading enterprises. Further, there are restrictions on export import for various strategic, health, defense, environment, and other reasons. So these are certain reasons for which the government is empowered under this FTP to put restrictions. Restrictions means either they will limit the number or they will bring it under the licensing route. That okay, you want to do this, you first come and take license from us. Now, if goods are exported for export import but not prohibited, so as I was saying, how they restrict it, the government will give you the license or permission. And for that, you have to satisfy the restrictions, norms, whatever set by the government. Exports are promoted through various promotional schemes. We are going to study majority of them here. All types of exports benefits that are given are what are coming from the FTP. You may feel that it is given in the GST law. You may feel that this is in the customs law. It is in the VAT law. Actually, it has come in those laws because of foreign trade policy provisions. Then, goods and services to be exported, but not the taxes. Now, this is the golden rule. Please remember this. This will help you in understanding, and even tomorrow, if you have to fight a case for your client, this is one of the golden rules. The policy document of India says that we want to export goods and services because that is how we will be relevant in the market. That is how we will have forex. That is how we will enter different countries and have good relation through trade. But we do not want to export taxes. Now, how this is done? This is done by exempting the taxes. However, in many cases, the government does not exempt it. Like in case of GST, if you are exporting goods, it is not called as exempt. They have given it a different term called as zero rated. What do they mean by zero rated? It means it is not exempt. So they give you two choices. One, you export without paying the tax in the first place, or two, you pay tax, but you go and take the refund. So effectively, there will be no tax. The tax will be zero. That is why they have put it under zero rated, but not under exempt. So there are different ways of giving this benefit so that your taxes do not get exported. Means what? Let us say my goods are of value rupees 100 and the tax, whatever it is, VAT, GST, whatever indirect tax is rupees 10. Now, if I add this 10 and I'm selling at 110, it means along with my goods of 100, I'm also exporting the tax of 10, which the government does not want because of various reasons. One, if they allow this, indirectly they are collecting the tax from a foreigner, which may not be principally correct. Two, the most important thing, our Indian goods and services become costly in the foreign market, and that may go against us because then the buyer may find other mediums of buying them from where they find it cheaper. So government does not want to impact the price or inflate the price by including the taxes. Now, how this is done? Any indirect tax on exports are either exempted or refund route is given for both input outputs through application of various schemes in the form of exemption, refund, drawback, rebates, etc. And what are these various schemes? That is what is we are going to study. Capital goods can be imported at nil duty, as what I was explaining. That is what is the EPCG scheme. If you are going to make output which can be exported and you can satisfy that export obligation, you can import it without paying the duty, which will be a big saving for everyone. Now, for units undertaking to export their entire production, so if there is some entity which is formed and which is only going to export, there is going to be no domestic supply. So for them, there are special schemes whereby they can save their taxes. Actually, the word avoid is wrong. It should be save their taxes at every stage, and that is by becoming EOU or SEZ. So once you register yourself under EOU or SEZ, benefit is whatever you are procuring, that will be given to you without charging duty. So you will get that benefit of procuring things without the duty burden. Further, in certain specified cases, import gets the duty exemption, concession, remission for special purposes. So when you are importing anything and which is meant for a special purpose, and the government wants to promote that purpose or protect that particular case, the government gives you concession exemptions even for import. Now, in such cases, to enable domestic supplier to compete with international supplier, the supplies of domestic suppliers are treated as deemed export. Now, this is something very interesting and important because many times we have this confusion about deemed export. Let me explain you this point. So let us say we go to this point only. You are 100% EOU. You are 100% EOU. Means what? Whatever your factory is producing, you are going to export the entire output. Fine. Now, if you are 100% EOU, as we read in the above point, whatever purchases you are making, those purchases, the government has made various schemes whereby you need not pay taxes on those purchases. Now, one of those schemes is that if you are 100% EOU, you can import your goods, your capital assets without paying the import duty. Great. Because anyways, whatever output you are going to make, it is going to be exported. That is what you have agreed. You have signed that particular EOU bond. So you have given that undertaking that my entire output will be exported. Now, because you have signed that EOU bond, that is why the government is giving you or allowing you to import goods, capital assets without paying the import duty. Now, this benefit given to EOU is working detrimental to our domestic manufacturers or suppliers. How? This EOU may also buy similar goods or capital items domestically because same things may be manufactured by other manufacturers in India, but the EOU will prefer buying it from outside. Why it will prefer buying it from outside? Because if it is buying from outside, it will get all duty concessions, means whatever it is getting from outside will be free of any indirect tax. And when it is getting the same thing from India, that will be burdened with some indirect tax. So for the EOU, it will be a burden where it has to buy those things domestically by paying extra in the form of some indirect tax. Okay. Maybe tomorrow after export, you will allow the refund, but still, at least my working capital is getting blocked when I'm buying these goods domestically. Later on, I may get refund, but again for refund, I have to make application and so many things I have to get into. So EOU will prefer buying from outside instead of buying domestically. Now, this is going against our overall concept of promoting our own domestic manufacturers. Hence, what concept FTP has brought in, which you'll find in GST also, in other laws also, that if a domestic supplier, like let us say I am the domestic supplier, is selling some goods to EOU. Now, actually, I am not exporter. I am not going to export anything. These things I am sending to the EOU. But in order to make me competitive with the foreign supplier, I will be treated as if I am making an export. Actually, it is not an export, but it will be presumed, it will be, at least in the eyes of law, it will be treated as if this is an export. So that is what is called as deemed export. So what is deemed export? The transaction is happening within India. I am a manufacturer. Let us say I have a unit in Surat. You are the EOU, your unit is in Chennai. When I am selling these assets to you, let us say the machinery that you want to buy, I will not charge duty, or even if I'm charging duty, that will be immediately refunded back to me. It means I will not burden your price with the price of the duty, with the amount of the duty, because in my hands, the law has said that we will call it as deemed export. So for me, it is not real export because my goods are not going outside India. But in order that for the EOQ, what it is getting from foreign supplier and what it is getting from me should be at par. From foreign supplier, it is getting things without paying duty because that is one of the benefits given to EOU. So same thing should happen when a domestic supplier is supplying them. To ensure this particular concept of deemed export has been brought in. So students, if you compare this with your GST, if you have studied deemed export concept in GST, you'll find that that concept is having the roots here. So what is deemed export? I am selling within India. I have nothing to do with foreign. But because that person can buy something from foreign duty free, so to make me competitive, make me at par with those foreign suppliers, what I am supplying to that EOU is deemed to be an export so that there is no duty burden. I hope students you got this point. See, by reading this FTP and various schemes, you will also get to understand why you have different benefits in the other laws. This deemed export, I hope, is clear to everyone. Hmm. Yes, students. Did you get this? Anybody has any doubts on this point, what I just explained? Okay, let me proceed then. Now, now we proceed further to understand the foreign trade policy. So once we have understood the features of foreign trade policy, let us start with the policy. So the policy which we are studying is Foreign Trade Policy 2023, announced on 1st April 23. And as we read earlier also, it is integrated policy. So it is covering various aspects besides only what is coming in the Ministry of Law and Commerce. It is also covering other ministries because any foreign trade policy has to be integrated, unified. So that is done. And it shall continue to be in operation unless otherwise specified or omitted. So until unless a new policy is brought into force, this will remain in operation. And as I said, there was no policy brought in 2024. So it's still 2023 policy is going. Now, WTO provisions in respect of foreign trade. Now, please understand this. Any government would open all its treasure to the exporters. It will say that, Baba, you export, I will give you everything. Even I will give you subsidies so that your price will come down. But this is not so easy. Why? Because today we all are governed by WTO conditions, rules, regulations. India being a WTO member, like how we are member of G20, we are member of BRICS. Similarly, very long back when we wanted to do globalization, open our economy, we signed this agreement and became WTO country or WTO member country. In that particular case, we are now bound by WTO guidelines. So whatever I wish to promote my business, that will not be allowed in all cases. That is why many times I have seen on various channels, YouTube's, people arguing that why government does not do this. This will solve all our problems. You should completely ban what is coming from China. But that is not correct. Why it is not correct? Because maybe to argue on some news channel, it sounds good. Maybe as a part of political agenda, it may sound good. But is it possible practically? Answer is no. Why? Because the WTO has give you certain guidelines. Now, the four major guidelines broadly is trade without discrimination. So if you want to be a WTO member country, it means what? Now you can trade with the world. So you have to follow certain common rules. What is the rule? You will not discriminate between two countries. It should not happen that you will restrict goods coming from one country and you will allow only goods coming from the other country, or you will sell only to one country and not sell to other country. You cannot do this. Obviously, this again has exception. Where let us say US itself has put sanctions, like as we see US has put sanctions on Russia and some other countries also. It was even threatening us that if we don't listen to US, they will put sanction on us also. But anyways, now India is itself a world leader, so it is now not it cannot be bullied down. Now the point is, if there is any particular sanction, no problem. We have to follow the sanction. In that case, maybe we may not sell or purchase from that country. But otherwise, the general guidelines is that you should not discriminate between two countries. Next important, predictable and growing market access. So your market, you should allow access to everyone. Again, here, it should not happen like as I was giving example that you will not allow Chinese goods completely. Yes, you can restrict certain goods, you can ban certain goods, but for that you will have to give justification. If you do anything from your side, remember one thing, immediately China or that country will go to WTO and file a complaint against you. And you'll have to answer them. And if you're not able to answer them, you have to pay for the penalty and damages. Third, promoting fair competition. And fourth, encouraging development and economic reforms. So you'll find that these are very broad points. But if you link it with the current scenario and if you read it in line with what India is doing with a particular country or what a particular country is doing with India or what a particular country is doing with any other country, you will make sense that maybe it may be emanating from one of these guidelines. Students, I hope these pointers are clear to you all. Anybody having any doubts, please feel free to ask. Raise your hand. I will unmute you and we can discuss. All right. Now coming to the administrative part of the foreign trade policy. Now, as we read this name, DGFT, this is the main regulator. As I mentioned, for share market, you have SEBI. For your this insurance, you have IRDA. Similarly, for FTP, the regulator or the person to whom you'll go for any of your doubts and the person who will do everything is the DGFT. So within the Ministry of Commerce, the body that is set up is DGFT. Like for direct taxes, you go to CBDT. For indirect taxes, you go to CBIC because these are the boards made for handling that particular subject. Similarly, for handling the subject of foreign trade policy, the board, the body, the authority is DGFT. So foreign trade policy is formulated, controlled, and supervised by the office of DGFT and attached office of the Ministry of Commerce Industry, Government of India. DGFT has several offices in various parts of the country, which works on the basis of the policy formed by the headquarters, which is obviously at. So administration-wise, for all administrative matters, you go to the DGFT. Now, what are the things that DGFT will do? DGFT will issue authorization, which were earlier called as license. Now, when this will be done? When there is a regulation. So only for those goods or those import-export where there is some regulation, there is some restriction, you will require authorization. So authorization means a permission in terms of the act to import or export. And this is applicable only for specified goods where there is some restriction. Further, it also grants the IEC, Importer Exporter Code number to the importer exporter. Now, what is this IEC? It is simply your registration number with the FTP. And this will be the number which you'll quote every time you make any import export, and all your schemes and everything will be linked with this. It is like your PAN card for FTP matters. So like how you register yourself under GST, you get the GSTIN, that is a GST identification number. You register with the income tax, you get the PAN. Similarly, when you register with FTP because you want to do foreign trade, maybe import export, the registration number that is given to you, which will be then your basic identification number, that is the IEC, importer exporter code. Import and export without IC is not permitted unless where it is specifically exempted. So everything has some exemptions. Similarly here also. Now, decisions of DGFT is final binding in respect of interpretation of policy, provision in Handbook of Procedures. Now, this is something very interesting. So those who want to delve deep into the foreign trade policy measures, want to go deeper into the schemes and the technical part, the forms, the procedures, the time limit, etc. Everything is given here, which is called as Handbook of Procedures. Then you have some appendices, that is appendix. Then you have the Ayat Niryat form. See, Ayat Niryat are the two words for import export in Hindi. So the forms, various forms that you require for any of import export matters, they are covered here, or they will be given by the DGFT. Classification of any item for import export in the HSN. We all have studied HSN, that is classification. All these things are done by the DGFT. A policy interpretation committee may be constituted to aid and advise DGFT. Obviously, for technical things, DGFT will require some technical guidance. So for that, a special committee is formulated. Now, exemption from policy and procedures. Now, we have seen that DGFT will be making so many things. But again, different people may be given relaxation or exemption, like how we saw the IEC is compulsory, but some people may be exempted, excluded from getting IEC, and still they can be allowed to do import export. In the similar fashion, whatever technical procedures this DGFT will be formulating, some people may be given exemptions from that. Now, DGFT may in public interest pass such orders or grant such exemptions, relaxation, reliefs as it may deem fit and proper on the ground of genuine hardships and adverse impact on trade to any person or class or category of persons from any provisions of FTP or any procedures. So this is what is the point about the exemption. So see, here DGFT is not levying any duty which it will exempt. Duties are levied by different acts. But DGFT is bringing all the restrictions, conditions, procedures, forms. So when we say exemption here, we mean exemption from these procedures, these forms, these technical compliances. That is what DGFT may do if it feels it is necessary in the interest of public and trade. Now, besides DGFT, there are other authorities which will also come into picture when we talk about foreign trade policy. Now, what are these other authorities? They are also directly or indirectly related with the administration of the DGFT or the FTP matters. So for all these matters which are coming under DGFT that is relating to FTP, besides the DGFT, there are other authorities or bodies which will also be coming into picture. Like the first one is the CBIC. We all know what is CBIC. It is the board which is today regulating the indirect tax. Now, as we saw in the previous slides, that there would be multiple types of export benefits, and majority of those benefits maybe on the export or the import side would be in the form of giving concession of some of the indirect tax. It may be import duty, it may be the GST, it may be the earlier VAT, etc. So if you have to exempt any of these things or you have to give any special concession on relaxation, it has to also find reference in the respective acts. That is where the CBIC's role comes into picture. And when CBIC comes, automatically Ministry of Finance also comes. So by default, along with DGFT, the second authority that has relevance in the foreign trade policy matters is the CBIC, falling under the Finance Ministry. Next, as we have seen that the Custom Department is responsible for the clearance of export import goods, also doing their valuation, examination, etc. Again, the custom authorities have to follow the policy formulated by DGFT while clearing the goods. So anyways, DGFT will be passing various policies, various procedures. So these have to be compulsorily followed by the Customs Department. So that is also covered. It is part of CBIC only. Further, since there is GST on almost all good services, excepting is petrol, etc., we all know, CGST authorities need to be also involved for all matters of export where goods have to be cleared with or without payment. So first authority which will come along with DGFT in foreign trade policy matters is the indirect tax related authorities. First, it is the CBIC, then the Customs Department, and then also the GST Department. Now, the second important authority is the RBI. Now, why RBI comes into picture? It is only because of the forex. Because whatever forex is flowing, it will be flowing through the RBI, or you will have to get it exchanged from the RBI or RBI nominated banks. This is where the RBI will come into picture whenever we are talking about the administration of foreign trade policy. Then besides the central, the state GST department will also come into picture because now in GST, both have been given the powers to manage the GST matters. So this is the background about the FTP. Now we start with the technical details relating to the foreign trade policy. I hope everything is clear up to this point. If anybody feels there is something which is not understood, anybody wants me to repeat or explain something, please let me know. I will repeat that point. Okay, Ginny is saying clear. I hope it is clear to everybody else also. Okay, so let us proceed now. Yes, fine, amen. Now, students, now we are going to the technical part of the scheme. So the first point, as you can see in front of you, is the contents of the foreign trade policy. Now, going deeper into the foreign trade policy is having 11 chapters, giving the basic policy. Now, if somebody wants to see how it appears, 1 second. Yeah. So see, this is the DGFT website. And from here, now see, this is how the foreign trade policy, as you can see, appears. So as we just read, there are multiple chapters, total 11. So here they are saying showing 1 to 10 of 11 entries. So 11 would be maybe on the other page here. So if I go to the next page, you will find the 11 chapters. So there are total 11 chapters in the foreign trade policy. Now, what are these? First, chapter 1 is legal framework and trade facilitation. Chapter 2 is general provisions regarding import export. We are going to study all this. Huh? Then developing districts as export hubs, duty exemption remission, EPCG scheme. Now, all this is part of your syllabus. Then the 100% EOU, the ESTP, STP, etc. Deemed exports. Now, up to this point, everything is part of your syllabus. Maybe not in that detail what you are going to see or study here, but yes, it is covered. So let me just, for example, open one of this. What I can open is, fine, I'll open this. General provisions regarding import, export. So see, chapter 2, general provisions regarding import and export. So objectives, policy regarding import or export of goods. Again, the same thing is repeated what we studied at the start. Exports and imports shall be free, except where it is regulated by way of some prohibition, restriction, etc. Or maybe in some cases, it may be restricted how that you have to only do that import export through the state trading enterprises. So you cannot do it directly, you have to go through this route. Then second is Indian trade classification, that is HSN. Now we all know about HSN. We studied the entire chapter of classification. Now this HSN, if you remember, I had mentioned that internationally it is 6 digit. So the World Custom Organization, WCO, the HSN which is formulated by them is only 6 digit. However, in India, we have added 2 more digits. So our Indian HSN code, which is there in our customs tariff, and now it is also part of our GST, is a 8 digit code. So internationally, it is 6 digit. However, here we are using 8 digit by adding 2 extra digits at the end. Further, you can see compliance of import with domestic laws, authorities to specify the procedure, import-export code, mandatory documents. We are going to study many of this in our syllabus because this is what is part of our syllabus. So this is what I was explaining, that when we are studying this foreign trade policy, let us understand some basics about the foreign trade policy. So there are total 11 chapters, as you can see, right? As on date, the policy that we are studying is 2023, which is notified from 1st April 2023. Now, this is very important. Handbook of Procedures. Now, what is this Handbook of Procedures? Ginny. Ginny is making a very good comment. Ki, sir, it is for the first time I have seen that definitions are given in the last chapter. See, I don't know what logic I can give for this, but see, the definitions here are not actually definitions. It is more like a clarification. For example, here they have used that word straight trading enterprise. Now, who all will be covered in straight trading enterprise? That they have put in definitions. So when you read any act, now see in any act, I can understand why you are saying this because whatever acts you have read till now, Contract Act, Partnership Act, or even your GST or Income Tax Act, the definitions are given at the start in section 2. Why it is given? Because the act is a new creature. You want to understand anything in the act, you need to know the definitions. Here, the foreign trade policy is dealing with whatever you already know. Only the thing is that the foreign trade policy is giving its own meaning. Not meaning, sorry. Foreign trade policy is giving its own policy for everything. So you already know what is exporter, what is importer, what is this, what is that. So here definitions need not be studied at the start. Only where you want a particular detailing, you need to go to the definition. That is why I believe they have or they would have kept it at the end. Fine, beta. Now, this, as I was mentioning, is very important. That is Handbook of Procedures. It contains 11 chapters covering procedural aspects of the policy. So the main foreign trade policy will say, okay, we will allow exemption. But how the exemption would be allowed, what would be the forms, what would be the time limit, in how many number of copies you have to do this, that is what is given in the Handbook of Procedure. So it is something like this, as you would have seen, in our case, like customs or in our GST, Act give the main provisions and the rules gives the procedures and the forms. In the similar fashion here, FTP, you can say, is like the Act, which will give the main provisions, and Handbook of Procedure is like the rules, which will specify how that particular thing has to be done practically. So it contains appendices, ayat niryat forms containing various appendices and forms relating to the procedural aspect. So just remember this, Handbook of Procedure is only covering the procedural part. Let me just find out that also. I forgot to already open it. So let me just search it now. It is easy. See, this is how you can also search anything. Handbook of Procedures 2023. See, automatically. Again, it is part of DGFT only. So you'll find it. The link is through the DGFT website only. See, so it is a Handbook of Procedures. What it covers the practical part. That whatever provisions are given, that this benefit is there or this particular provision is there, how it will be implemented. Now see, again you will find the chapter heading same like what was there in FTP. So I'm just opening the FTP again. See, FTP, what were the chapters? Legal framework, general provisions regarding import, export, developing district as export hubs. Same chapters you'll find. Legal framework, general provisions, developing district as export hub, duty. Why same chapters? Because basically we are not dealing with anything new. The same thing is there, only we are specifying the procedural part, the practical part. Hence, you'll find similar chapters here. Maybe one or two chapters may be different, which is not having any procedures. That may not be here. Some other forms may be, some other chapter may be here, but otherwise, same chapters are there. So, the said procedure is contained in the following compilation. So, Handbook of Procedures, one, what we are referring. Other is appendices and the Ayat Niryat forms. And this is again interesting, Scion. Scion is the standard input output norms. So it gives a ratio. That let us say if you are making 1 kg of output, how much input of raw material would be required. So it is giving or fixing the ratios. Why? Because see, you will be exporting final product, but I want to give you benefit of taxes paid on import. So how much final product exported should give you benefit of how much import or input side tax benefit. For that, Scion is very important. So these are certain things. I'm not reading them because it is not so much necessary for you at this level to go so much into deep. I just wanted to show you practically how this is. So I've just opened it. So you can see this is all about your Handbook of Procedure. So it is like the rules what we have in our income tax, or in our GST, which gives you the details of the procedural part, the practical part, along with the forms and all, right? So, contains various appendices forms relating to the procedural aspects provided under the policy and procedures and scions of various products notified from time to time. Now, based on the scion, exporters are provided the facility to make duty-free imports of inputs required for manufacture of export products. So see, you will be exporting in future, let us say 1 lakh kgs. For that, how much duty-free import should be allowed? That is based on scion. So maybe if your import-export ratio is set at 1.1, that is for 1 lakh, you will require 1 lakh 10,000. So if you are giving me a commitment of 1 lakh export, today I will allow you to import 1 lakh 10,000 units duty free. So that is how scion works. The next thing, which is part of your foreign trade policy, as we saw earlier when we were reading the foreign trade policy, is the classification of export and import items. The export import policy regarding import or export of specific items is given in the Indian trade classification, which you can see ITC, based on the harmonized system of coding, which is called as the HS, or we call it as HSN. Now, ITC HS coding was adopted in India for import-export operations. Indian customs uses 8-digit code, as we all know, whereas internationally it is 6-digit. ITC HS codes are divided into 2 schedules. So we have, and all this we studied, if you remember, in our customs part, that Schedule 1 of our Customs Tariff Act gives the schedule for import, and Schedule 2 gives the schedule for exports. So this is what is coming from the ITCHS, where they have also made it in 2 schedules, Schedule 1, Schedule 2, and same 2 schedules we have copied in our Customs Tariff Act. So Schedule 1 import policy, it describes the rules and guidelines relating to import policies, whereas Schedule 2 is the export policy, describes the rules, guidelines, etc. for the export. Presently, most of the goods can be imported without any authorization. This we studied at the start also. So today, import-export majorly is free. Free means you do not require permission or license or authorization, right? Schedule 2, that is relating to export, contains very few products. If you remember this, when we were discussing customs, I had mentioned this, that hardly today 25, 26 products are only in the export schedule, because only to that extent the government wants to levy the export duty. So today only very few products are there where export is prohibited or restricted. Excluding those items, export of all other goods are duty free also and restriction free also. SCOMET list is also provided. Now, if anybody is interested in knowing what is SCOMET, and I'll tell you. See, here we have SCOMET also. See, what is SCOMET? Special chemicals, organisms, materials, equipment, and technologies. So they have made a group of some items which is called as SCOMET. Now, these are some special chemicals. These are some organisms, materials, equipments, technology, for which they want to have a specific rule. That is what is covered in chapter 10, SCOMET. So let me just show you what this SCOMET is for your interest and knowledge. So see, what does it say? Policy relating to general provisions governing export of dual-use items, munitions, and nuclear-related items, including software technology, that is SCOMET, is specified in this chapter. So basically what it covers those items which are either related to software, technology, etc., or those items which are dual-use items or munitions or are nuclear-related items. So you can see what is the relevance of this. This chapter covers the procedures for various applications relating to export and import of these items which are covered under SCOMET. Now, SCOMET categories and licensing jurisdiction. So, I'll read something else which will be of interest to you. Now, see, controls on non-SCOMET items for dual use. If the exporter has been notified in writing by the DGFT, or he knows or has reasons to believe that an item is not covered in the SCOMET list, but has a potential risk of use or diversion to weapons of mass destruction, that is what is a dual use. So many times you'll see that it is a chemical, which is actually a chemical to be used for making some particular items. However, there is a possibility that the chemical can also be used in making weapons of mass destructions or in the missile system or military use. Like you all know, uranium and all these things, when they are imported today, these are used in our thermal plants for generating electricity. But they have a another parallel use that they can also be used for making some nuclear weapons, which will be of mass destructions. And they could be used by people like terrorists or non-state actors. In such case, he shall apply for SCOMET authorization. So even those items which are not covered in the SCOMET list, but they have a possibility of being used for the other purpose, that is making such mass destruction items. So they will also be requiring the SCOMET authorization. So from this, I think you'll understand more what is SCOMET. So SCOMET is basically covering those items which may be chemicals, which may be other materials or software, which would be used or could be used for making weapons or things of mass destruction. So that is what is the relevance of SCOMET. Fine. ठीक है. Students, I hope you're understanding things. See, this is one of the most technical topics, I'll say, the most technical topic of your entire IDT paper, because it is having so much minute detailings and also so much procedural part. But let us try to go into in depth, because as I said, if by chance you develop interest in this and want to take this as your professional subject, it is a very highly paying professional area, right? Now, let us go to some very important concepts. Now, whatever you are studying here has been copy pasted from the FTP or the Handbook of Procedures. So if you find these things in those two documents which I'm showing on the screen, you'll find them verbatim. They are copy pasted because anyways, our module need not make any change because these are the concepts taken from there. But now these concepts, we need to also understand as to how they are relevant in FTP or what is the importance of this. So the first concept is authorized economic operator. What is this? Under the AEO program of Indian Customs, a business entity engaged in international trade is granted AEO status if it is approved by customs as compliant with the supply chain security standards. Such entities are considered as a trusted trade partners of Indian customs. So what is AEO? AEO is a special status or a special recognition. Like how in our schools, we had, okay, these 10 students are toppers, these are athletes, or these are very good singers. So in our school also, we used to get special status, or people like me were getting the status like, okay, he's falling in the group of the most notorious students or the most mischievous students. So that was also very privileged status for us. So we used to enjoy that status. So similarly, under customs also, you are given different statuses. Now, this is one such status which you have to apply. And if you are given this status, you get a lot of benefits in the form of easy import and export procedural part. So those who are regular importers, exporters, if they want that at the time of import export, their procedural part should be easy, should be faster, or many things, they need not get it checked from customs. They should apply for this AEO status. Now, AEO status holder gets extensive benefits. What are they? Preferential customs treatment in terms of reduced examination, faster processing and clearance of cargo, and even deferred payment of duty, direct port delivery or entry, enhanced border clearance privileges in mutual recognition agreement partner countries, greater facilitation and self-certification. So you can see these are the n number of benefits. And I'm not explaining them because I assume that you can understand the basic English and what they mean. So basically, if you get this AEO status, and it is simple, you have to apply. They will do some of your fact checking. And if they find that you are a compliant person an honest person, they will give you this status. Later on, they will keep monitoring you. Wherever they find that you have breached any of these things, they will remove the status. But if you get this status, what is the benefit? You get a preferential treatment in customs. So everywhere you will be first in the line. Like how if you have checked in any airport, or if you are going in for boarding a flight at both times, if you are having a business class ticket, you are always given the first entry. The same thing happens over here. Even if you're having a business class ticket, certain lounge accesses are available to you, but they may not be available to others. So that is how you get a preferential treatment. What is the preferential treatment? It is the reduced examination. So others may have to go through 10 or 12 examination. For you, only 5, 6 are sufficient. So it also helps in faster processing and faster clearance of your cargo. So obviously, if lesser examination is there, your cargo will get cleared faster. Then deferred payment of duty. This is, according to me, a very big benefit. So as we have studied in customs, whenever you want to clear your goods, you have to first pay the duty. But these people will get the benefit that they may defer the payment. Obviously, they will be given the terms and conditions, but that again is a very big benefit. Then direct port delivery or entry. Your goods may not go to the another area, or they may not be unloaded there. They may be directly unloaded at the port. You may also be allowed entry into the port, which others may not enjoy. So these are some specific benefit of becoming AEO. So if your client is a regular importer exporter, you should definitely pitch for AEO to your clients. Then comes town of export excellence. What is this concept? Selected towns which are contributing handsomely to India's export by producing goods of specified amount may be granted recognition as TEE. So what is this? That particular city or town is given this status. So earlier, the first status was given to an individual importer exporter. This status is given to that whole city or town. They will be provided targeted support and infrastructure development to maximize their export competitiveness. So let us say, like if you know in South, there is a place called as Tirupur, which is contributing a major part to India's export of hosiery items. Similarly, in India, you have so many other small cities. Like our city of Nashik is famous for export of grapes. So major part of grapes export is done from the place like Nashik. So such small town places, city places are identified, whereby what happens if they get this status of TEE? There will be infrastructure development. So you will have good roads, or you'll have dedicated corridors. Nowadays, you would have heard this word trade corridor. What is this trade corridor? There will be a special route which will be used only by trucks or those vehicles which are carrying the goods. No other vehicles would be allowed. So that is a dedicated trade corridor. Plus, you'll have special warehousing facilities in those cities so that your goods can be stored for a longer period of time. So these are the facilities that will be made by the government in the cities which are falling in the category of TEE. So they will be provided targeted support infrastructure development to maximize their export competitiveness and enable them to move up the value chain, and also to tap new markets by granting some special privileges to them. Fine. Now this point, students, I want you all to be more attentive, because this status holder concept is the one which is going to affect us throughout this chapter. Affect means it will be applicable to us. You will find this word getting repeated again and again in the future topics. So who is this status holder, and what are the pointers or the specific provisions relating to this? So who are status holders? Status holders are exporter firms. So first, it is applicable only to export persons, recognized as business leaders who have excelled in international trade and have successfully contributed to countries' foreign trade, obviously by way of export. They are expected to not only contribute towards India's export, but also provide guidance and handholding to new entrepreneurs. So besides they being the export icons of India, they will also become the torch bearers and the guide to the newcomers. So this is where you get this benefit, where you are given this status holder benefit. All exporters of goods, service, and technology having an IEC number shall be eligible for recognition as the status holder. So anybody can be recognized as status holder, obviously subject to some conditions. Status recognition depends upon export performance. So obviously, who will be given this status holder this recognition? Who have met with certain minimum export performance. Now, an applicant shall be considered as status holder upon achieving the threshold export performance in the current and the preceding 3 financial years as indicated below. Now, this is the target given. And if you comply with this target, you get the status of, or you get that special privilege of being a status holder. So these they have given, if you are exporting from one export house or from two or from three or four or five, if you are exporting, then the depending upon your turnover, as you can see, which is threshold in USD millions, if this is your export, you get this status: 1-star export house status, 2-star, 3-star, 4-star, 5-star, and obviously you can see that 5-star is the highest rating. So how you have ratings for various apps that you download, for various products that you buy, here also, depending upon the quantum of the export you achieve in current as well as preceding 3 financial years, you are given one of these statuses. And again, obviously, as we can understand, for each status, there would be different levels of benefits, and obviously, the highest level of benefit will be to the person having the 5-star status rating. Now, what are the points that you need to consider? The points which merit consideration while computing your export performance for the grant of this status is, so if you want any of these status, you have to achieve the minimum export that we just saw. But what are the points that will be considered when we are checking this? So the points that will be considered is the export performance shall be counted on the basis of the FOB value. We all know now that there is FOB, there is CIF. We have studied this in the valuation chapter. So while counting the limit that is given, that we just saw, that will be counted on the basis of the FOB value and not the CIF value, correct? So export performances shall be counted on the basis of FOB of export earnings, which will be in freely convertible foreign currency or in rupees. Next, for deemed export, FOR value of export in Indian rupees shall be converted into the US dollar at the exchange rate notified by the CBIC as applicable on the first of each financial year. So simple है कि whenever you have to convert the rupee value to the export value, you will need this foreign currency, and that foreign currency rate will be obviously given by CBIC as on the first day of the financial year, right? So this is simple. Now, for granting this status, an export performance would be necessary in all the 3 financial years. So 1 or 2 years is not sufficient. You have to comply it in all the years. Export performance is not transferable. Now, this is interesting. Let us say I've exceeded the limit. So I'm having extra export, and your limit is just falling short of the export by 0.5 or 0.2 million. So can we do that? That okay, I am, instead of making 3, I have done 3.5, and instead of making 3 or only 2.8 million. So can we do this, that I have extra export of 0.5 million, which I will say, okay, you use my export so that you also fall in the category? Answer is no. So I have exceeded 3 because my export is 3.5 million. I will get the 1-star category rating or status, but you are just 2.8. You cannot use my extra 0.5 million export to make or complete your export performance to match the requirement. That is not allowed. Export made on re-export basis shall not be counted for recognition. Now, we all know the meaning of re-export. What was earlier imported is again sent back after some processing or changes. That is re-export. It will not be counted, obviously, because it is not a fresh export. Next, export of items under authorization, including SCOMET items, would be included for calculation of export performances. Now, important, where you require authorization, because those items are under the restricted category, and it also includes the SCOMET, which is the most sensitive items. Even export of these items would be counted. So there is no problem that you are exporting these restricted items. Anyways, you are exporting it with authorization of the government. So once you are exporting these restricted items, those would also be counted while counting your export performance target. Next, for calculating export performance for grant of 1-star export house category rating, export by IC holders under micro and small industry enterprises, manufacturing units having ISO, BIS, and units located in northeastern states, including Sikkim, etc., etc., and export of fruits and vegetables shall be granted double weightage once in any of these categories. So I hope you understand what it means. So your export is of 100, they will be counting as 200. Again, by the names, you can understand why this is done to promote these people. So if these people are making export, the value of their export will be doubled. So their export may be, let us say 1.6 million, it will be doubled to be counted as 3.2 million to check whether you are satisfying the limit of that 3 million, which is there for the 1-star export house status. So only for this, not for the further 2, 3, 4 stars, because then that will be unfair to others. Only for that 1-star status, because that is the entry point of the status holder concept. So in order that you become at least a status holder and you are one of these people, your value of export would be given double weightage. So whatever is your actual value, that will be multiplied by 2 for the purpose of matching with the limits. I hope this is clear. Now, why to become a status holder? What will be the benefit of becoming the status holder? So these are the general benefits. Actually, independently, there would be different benefits, but these are the general benefits. What are they? First, authorization and custom clearance of import-export will be on self-declaration basis. If you remember, we studied self-assessment in section 17. So wherever self-assessment is to be done, that is where this particular status holder concept will be useful. So your custom clearances will be on the basis of your self-assessment. No involvement of officer, no examination, nothing would be required. Yes, test check basis they will do just to ensure that you are not doing any fraud thing. But otherwise, it will be purely on your own declaration. They will not interfere. Most important, fixing the input-output norms on priority. So, as I mentioned, I was explaining the SION norms. What are those? Those are the norms for fixing the input-output ratio, because on that basis only you will be given various import benefits. So for you, it will be done on priority, which will be within 60 days. Exemption from compulsory negotiation of documents through bank. So what is this? Whenever there is any foreign trade, you require the bank to come into picture, because on your behalf, they will give letter of credit to your supplier or vice versa. Now, there are multiple documentation which is required through banks, and obviously bank has charges for everything. Now, you generally go for negotiation. All these negotiations would be freely, means already done by the government, and obviously the most favorable rates would be given to you. Exemption from furnishing of bank guarantee in schemes under FTP unless otherwise specified. So for getting any scheme benefit, you have to give the bank guarantee again, which you get from the bank by paying some charges. So for such status holders, you will get these bank guarantees. You will get the benefit of the schemes without giving bank guarantee. So again, that will save your cost. Now, 2-star export houses and above, so those who are in the rating of 2 or above, are permitted to establish their own export warehouses. So they will be eligible to establish warehouses where they can store the goods before export. Further, manufacturers who are also status holder of 3, 4, 5 category will be enabled to self-certify their manufactured goods as per their industrial entrepreneurs memorandum or industrial license or letter of intent as originating from India with a view to qualify for preferential treatment. Now, if you remember, in our chapter of types of duties, there was standard duty and preferential duty. What was preferential duty? That is where the goods are coming from a particular country. That is, the goods are of a particular country origin. You will be levied preferential duty. Preferential is always a lower duty. Similarly, vice versa, other countries have also done that, where in their customs tariff act, they have put the preferential duty, which is a lower duty, and they have made the list of preferential countries, in which in majority countries, India is today there because of our strong foreign trade relations. Now, if you are a status holder of 3, 4, or 5-star category, you require that stamp, you require that, a confirmation that these goods are originating from India. And obviously, it is done by going through different authorities and department who will be doing that stamping or authorization. And only then your goods will be considered as of Indian origin and will get the benefit of that special or preferential duty. But if you are a status holder of 3, 4, 5-star category and you are a manufacturer, this again certification that these goods are of Indian origin will be done by yourself. You need not go to the authority again. That will save your time and cost. See, so you can see what is the benefit of becoming these status holders. The benefit is you get lot of relaxation from various compliances, various procedures. So this makes your trade more faster, smoother, at times at a lesser cost than your other competitors. Then, status holders shall be entitled to export freely exportable items on free of cost basis for export promotion subject to specified annual limit. Now, where you are sending certain items which are free of cost. Why they are free of cost? Because they are for promoting export. Like you are sending samples, you are sending some minimum quantity to different countries because you want to give them a flavor of what your goods is so that they can check your goods, use your goods, and then place an order of bigger quantity. So you send these goods free of cost. Now, if you are sending these goods free of cost, once it is an export, and if any export duty applies, it will be levied on you. However, if you are a status holder, you will be allowed to export these items free of cost basis. That is, there will be no charges, no duty on such items. Further, the status holders would be entitled to preferential treatment and priority in handling of their consignments by the concerned agencies. Fine. So these are the benefits of becoming the status holder. Now here we take a small break of around 15 minutes. We come back to read in detail what are the provisions given in the FTP relating to import export. Fine. So we'll have a short 15 minutes break and we will rejoin to deal with in detail the provisions of import export. Thank you. So students, we studied background, we studied the legislative power, we studied the broad salient features or the broad overview of the scheme, and we studied some important concept जिसमें से जो status holder वाला point हमने पढ़ा students, that is the very important point when it comes to exams. So I'm also informing you the important pointers. Kindly make a note of it so that you can prepare it for the exams. Now, we go to some specific import-export provisions provided in the FTP, which has to be followed by every importer-exporter and also by the custom authorities. So let us understand them. So first we are reading the general procedures, which is common to both import-export. Then we will go to independent procedures for import and export independently. So first point, prohibitions or restrictions on import or export can be imposed by the DGFT only by way of giving a notification. So if there has to be any restriction which the DGFT wants to bring, they have to bring a notification, and the notification should specify the reasons, which should be something linked to public interest. So two things: one, any restrictions has to be brought in by notification, and second, the notification should be specifying the reasons which are in public interest. If any of these things are not followed, the restrictions would be considered as ultra vires and they will not be having any legal sanctity. Now, if there is a restriction, an authorization is required for the import export. So see, basically it is not prohibition. Prohibition, nothing can be done, no import, no export. But if it is a restriction, in that case, the point that you have to remember as an importer exporter is if your goods are kept in the restricted category, it means import export is allowed, but with the condition that you have to first take an authorization. Authorization means, like earlier it was license, today you can call it as a permission. And the import authorizations are for actual users only. Means it cannot happen that I as a trader can import it and give it to somebody else. So wherever these items are put under restricted category and you are taking the permission, it means the goods which you are importing falling under that restricted category have to be used by you only. You are not allowed to sell it to any other person after import. So that is what is the actual user condition, unless this condition is specifically relaxed. So in certain cases, they may relax this condition. Otherwise, you have to presume this condition is inbuilt. So until and unless they have specifically relaxed this condition is inbuilt for all restricted items. Next, authorization can be applied for on the DGFT portal, for which this is the link, by using your IEC. So wherever there is a restriction and you want to take the authorization, now everything is online. You have to go to the DGFT portal, put in your details with your IEC numbers, and they will analyze. And if they find appropriate, they will give you the authorization. Now, coming to the prohibition category. Prohibition on an import and export have been imposed only where the imports are happening from either particular country or from particular organization or groups or individuals, etc. Further, product specific prohibitions may also be imposed. So import export prohibitions. So prohibition means you cannot do the import export. That will be either qua a country, that is from a particular country. Let us say North Korea, we can put it in that particular list, or any other country where we feel that there are many such activities going on which is against our country's interest, maybe in terms of security or safety or any type of trade. We can put restrictions, complete restrictions, that is prohibitions. Obviously, it is not so easy as I mentioned earlier. Immediately that country will go to WTO and there can be a problem. Similarly, we can put restrictions where the import exports are happening from a particular organization or group. Now, generally in case of terrorist organization, you will find that many times you will find news that a particular organization is put in the gray list, a particular country is put in the gray list, or a particular organization is put in the banned list, whereby those organizations will not be allowed to do any type of international trade because they are put in some banned list because they have been found involved in any terrorist activity or any anti-national activity. So in similar fashion, it may be qua an individual. So where a particular person is found to have a criminal background or such involvement in activities which may be detrimental to a country as a whole or to a particular economy or to a particular government, those individuals can also be put in the prohibited category. So for such cases, there could be restrictions where import export from such countries, organizations, and individuals will not be allowed. Similarly, for some specific products like during COVID, the particular mass PP kits were put under prohibition because it should not happen that we are exporting it to outsiders and our own country will have the shortage of it. So similarly, maybe certain specified drugs or any items which are of basic necessities may be put here so that our country do not have this. I'll give you example. There was a period 6 months back when export of the normal quality rice was put in prohibition for some period of time. Only the basmati or the premium quality rice could be exported, but the regular normal quality which we are using in our day-to-day food, that was put under prohibition because in European countries there was a huge shortage of rice, and obviously every businessman would try to take opportunity by exporting the rice, but again rice is a staple food of India. So it should not happen that in the quest of earning more by selling to outside countries where there is a shortage, our country should face a shortage. That should not happen. So for a limited period, rice was put under prohibition. The normal rice, basmati rice, was allowed to be exported. So this is example of product specific prohibition, which is generally time bound, and there is a reason for that. Further, special schemes may be devised to promote and regulate trade and strengthen economic ties with neighboring countries. Fine. Imported goods are required to comply with all domestic laws applicable to domestically produced goods unless exempted. So let us say, like we find that there are many instructions written on a particular product that you are buying. Those restrictions may be in relation to the use, maybe in relation to their storage, maybe in relation to the resale. Now, if any of the domestic goods are having such conditions, restrictions, all such conditions, restrictions will equally apply to all the imported goods which are similar to these goods, for which domestically they have some restrictions. So all things will apply. Like, for example, you buy deodorants, there are some conditions given that it is highly inflammable, it should be kept out of reach of children, it should be not kept in direct sunlight. So these are general, I'm giving an example of restrictions. Similarly, there could be many such restrictions on domestically produced goods. Same thing continues to apply for imported goods unless they are excluded from such restrictions. Further, in addition, the DGFT may prescribe procedures by means of giving notice to be followed by any importer or exporter. Further, now, some more pointers in this are relating to the HSN code, that is the Indian Trade Classification of the Harmonized System. The information regarding status of goods being free, restricted, prohibited, traded through STE for import export is available in this. That is the import export policies of all goods are indicated against each item as per the HSN code. In simple words, you want to know what is the restriction on your goods, whether they are free, whether they are prohibited, or they have to be imported, exported, compulsory to the state trading or enterprise, etc. How you will find it? You have to go through the HSN. So you type HSN in the relevant DGFT portal tab, you will get all the restrictions relating to your goods. So in addition to this, status under the foreign trade policy, import or export may be subject to restrictions or conditions under any other law as well. So generally for different types of goods, especially drugs and all, they put such restrictions whereby you have to also comply with restrictions under the other law. Like simple example for drugs is the expiry date. So such restrictions are also applicable, which are put in other laws. Then International Harmonized System goods nomenclature was adopted in India for import-export operations. In India uses 8-digit code, that is fine. Now, this word has been coming again and again that in case of certain goods, the FTP or the DGFT may put such restrictions that these are allowed to be imported, exported, but not directly by you. You have to route it compulsory through the STE, that is the State Trading Enterprise. Now, what is this STE? The ITCHS specifies against certain goods that they can be imported, exported only through the STE. And who are these STEs? They will be notified by the DGFT. Now, STs are government, non-government enterprises, including marketing boards. Like now, I'll give you a simple example. You have tea board, coffee board, cardamom board. So maybe government can put your spices in this particular restriction, whereby they will say that if you want to export this particular quality of tea or coffee or cardamom or any type of spices, you have to do it through your boards only. Now, these are the boards which are already formed by the government for the promotion of these spices or these particular commodities. But now they are putting a restriction that if you want to export them, you route it through them. Again, as I mentioned at the start, the purpose is I do not want to stop you, but I want to keep a record of how much quantity of these goods are going out or coming into India. Obviously, for my other reasons, I need to have this data. So I put this restriction that you have to do your import export not directly, but through these STEs, which may include these boards, which deals with the goods or their export import. However, DGFT has the discretion to issue authorization to other entities also who can do import export that are notified for exclusive trading through STs. So again, either these boards which are already formed by the government can be made STs, or some other private bodies can also be given the authorizations. Some of the STs are Food Corporation of India, Oil Natural Gas Corporation of India, National Fertilizer Limited, Indian Rare Earth Limited, National Dairy, etc., etc. So these are name of today some common STs where the government, see, as you can see from the names, these are already bodies formed by the government for regulating those particular businesses, trade or goods. Now they are also notified as STs so that whatever export happens, it happens through them. So that the government keeps a track. They have the data for all their future planning and policy making purposes. Fine. Then comes the IEC code. We read about this also at the start. Now, some details relating to this. A person can undertake import-export activity only after it gets the IEC code. So it is like registration with GST. Only after that you can do GST transactions. Similarly, for doing import-export, you have to have this IEC. It is a 10-character alphanumeric number allotted to that entity. It is the same number as the applicant's PAN, but is issued separately by DGFT. So it is not a different number. It is your PAN only, but this PAN is not the one given through the income tax or under the income tax law. It is the one given by the DGFT. An online application has to be filed for this IEC. Specified categories of importer exporters may be exempted from getting this IEC. Generally, they are the government or government bodies who are exempted from getting IEC. IEC details have to be electronically updated every year, even if there are no changes, failing which it will be deactivated. So in short, every year, whether or not you are doing import export, you have to keep on updating. So in short, it is like reapplying every year or renewing the number by filling in the necessary details. Now, this is important. There are some mandatory documents that have to be used or filed whenever you're doing import export. So for export, what are the mandatory documents? Bill of lading, airway bill, lorry receipt, railway receipt, postal receipt, commercial invoice come packing list, or separate invoice and separate packing list. And most important, this is what we studied in the custom law also, shipping bill, bill of export, postal bill. Similarly, for import, same documents, bill of lading, airway bill, etc. Because this is the proof of the document of title of goods also, and it is also a proof of transport. Second, the invoice, the commercial invoice, along with the packing list, it may be in the same or it may be separate. And most important document from the customs point of view, it is the bill of entry. Now, penal action if you are found guilty of any of the procedural miscompliance or non-compliance and the relevant action. So, penal action. In following situations, a person shall be liable for penal action under the Parent Act and the rules and orders made thereunder FTP and any other law for the time in force. First, authorization holder violates any condition which was given while giving the authorization or fails to fulfill the export obligation. As I was saying, I was giving example of EPCG. If you are importing some machine without paying import duty, they give you a target that in the next coming 5 years, 6 years, you have to make export of minimum 6 times of the duty which you have saved. Now, this is called as your export obligation. If you do not fulfill your export obligation, obviously you are liable for penal consequences. Further, if you fail to deposit the requisite amount within the period which is specified in the demand notice. Second, any information particular furnished by the applicant is subsequently found to be false. Now, with a view to raising ethical standards and for ease of doing business, DGFT has provided for self-certification under various schemes. Now, this we saw in case of status holder, that if you become a status holder, or in case of AEO, if you remember, for these two people, self-certification was allowed. However, if after I'm giving you self-certification, in some cases, without checking, your goods are allowed to be imported or exported, and tomorrow it is found that you have done some fraud, either you have brought in some non-eligible items, or you have misdeclared the rate or the value, then again the penal actions will follow. In such cases, application is expected to undertake self-certification with sufficient care and caution while filling up the particulars. Because if your self-certification details are wrong, because of which it leads to any type of tax evasion or wrong import-export, tomorrow you may lose that particular status also, plus there would be penal action against you. Now, what is the other punishment? That is denied entity list. What is denied entity list? A firm may be placed under the DEL by the concerned regional authority of the DGFT, and in such case, firm may be refused grant or renewal of license, authorization, certificate, scrip, or any instrument giving any type of fiscal or financial benefits. So once you are found guilty of any of miscompliance, once you are found guilty of any of the above pointers that we just discussed, like you did not fulfill the export obligation or you violated any of the conditions, besides the penal action, you may also be put in the DEL, which is the denied entity list. Now, as the name suggests, denied entity means the benefit would be denied. What benefits? Now, henceforth, you will not be allowed to renew your license or authorization. You will not be able to renew the certificate scrip on the basis of which you are getting some benefit. So you are getting some drawback, you are getting some subsidy, you are getting some type of a grant. All these things will automatically get stopped because all these licenses, scripts will not be eligible to be renewed. Further, new licenses, authorization, script, etc. will be blocked. So see, I will put everything against your IC number. Once I put everything against your IC number, new applications will also be blocked against that number, plus original will not be renewed. A firm's name can be removed from this list by the concerned RA for reasons if the firm completes the export obligation, pays the penalty, fulfills the requirement, etc. So whatever was not done, if you do that within the sufficient time allowed and with the penalty amount, we may remove you from the DEL list. It means you will be allowed all the benefits again. Now comes the most important point. If you remember, we read this point that if you are given the authorization for the restricted items, that authorization is given with an implied condition. This may not be written separately. This is implied that it will be under the actual user condition. Now, this condition is now only for import. Up till now, we were discussing the conditions which was common. Now, for import, this is a specific condition. What is that? Actual user conditions. Goods which are importable freely without any restrictions may be imported by any person. However, such import which requires a authorization. And what are these imports which are put in the restricted category? Actual user alone may import such goods unless said condition is specifically dispensed with. Now, import of specific category of goods. Now, here onwards, we have some very important pointers, which is important for exams. You get a direct question on this. So, what are the special rules in FTP relating to some specific items of imports? First, samples. Import of samples of even restricted items is allowed without import authorization. So generally, as we have already studied, if any item is put in the restriction or in the restricted list, you can import it, but for that import, you will require authorization. However, if for the same item, you are only importing 1 or 2 pieces, which is sample, for that, you will not require import authorization. It means it will not be considered as restricted. It would be put in the free category where import export is allowed freely without any restrictions or authorization. However, exceptions are defense, security items, seeds, bees, new drugs. Even if these are imported as samples, they will require authorization. So general rule is any item imported as sample, even though put in the restricted list, will not require the authorization or permission. But exception is these items, even imported as samples, will require authorization. Now, duty-free import of samples up to rupees 3 lakhs for all exporters shall be allowed, subject to terms and conditions, etc. So similarly, whenever you are means importing these items, up to rupees 3 lakhs is the limit where it will be considered as a sample and allowed to be imported free. Free means without restriction. Next, plus there could be duty exemption or benefit also. Now, second is when you are importing gifts, including those purchased from e-commerce portals through post or courier where custom clearance is sought as gifts is prohibited. So where you are saying somebody is sending you gifts, and those gifts you may be getting through e-commerce portal because somebody has paid for you and giving you as gift, or you are getting it by way of courier or post. In such cases, it is prohibited. Exceptions are Rakhi, life-saving medicines. Gifts, however, can be imported upon payment of applicable customs duty. If duty leviable on Rakhi is up to 100, no duty will be collected on the same. Fine. I'm unable to unmute you, but I'm trying to unmute. Yes, I think no. Yes, now you can speak.
Sir,
Batai.
actually, I got confused in this. The duty-free import of samples up to 3 lakh for all exporters shall be allowed subject to terms. Can you explain this again?
See, अगर आप एक्सपोर्टर हो ना बेटा,
Yes,
तो
sir.
आपके लिए ये जो लिमिट है सैंपल्स का वो 3 लाख कर दिया है। मे बी बाकी सबके लिए 3 लाख से कम होगा, बट
Okay.
इफ यू आर एक्सपोर्टर तो
Hmm.
आपके लिए सैंपल का जो इंपोर्ट का लिमिट है वो बढ़ा के 3 लाख कर दिया, और वो भी आपको बोला है भाई ये तो हम ड्यूटी फ्री भी कर देंगे, मतलब इसके ऊपर आपको कोई इंपोर्ट ड्यूटी भी नहीं लगेगी। तो बाकी सबके लिए सैंपल्स के लिए लिमिट रहेगा, राइट?
Okay.
इधर सैंपल्स के लिए लिमिट और
अच्छा,
बढ़ा दिया है अप
ओके,
टू,
यानी
विच इज अ बिग अमाउंट ना।
हम्म, यानी एक्सपोर्टर है तो वो उनको एक यानी छूट के तरीके से दिया हुआ है कि
हम्म,
आप इतने 3 लाख तक का इंपोर्ट कर सकते हो
करेक्ट।
सैंपल्स।
परफेक्ट।
थैंक यू सर।
यस। सो सेकंड पॉइंट वाज ऑफ गिफ्ट की गिफ्ट बोल के आप कोई भी चीज को इंपोर्ट नहीं कर सकते। सो इंपोर्ट ऑफ आइटम्स एज गिफ्ट इज प्रोहिबिटेड, एंड वेर एवर यू वांट टू इंपोर्ट इट, इट विल बी लायबल फॉर कस्टम्स ड्यूटी। नाउ, passenger baggage. Now, if you remember, we have already studied baggage rules when we were studying the customs, where it was mentioned that कि baggage के लिए there is restriction, that first it should be either along with you or it should be coming before or after you within a specified time. Only that will be considered as baggage. Now, what is the benefit of anything being considered as baggage? If anything is considered as baggage, the biggest benefit is you are allowed to import it duty free in certain cases. Now, for getting that benefit, your item should be falling firstly in the definition of baggage. One. Two, it should be imported or it should come along with you or come before or after you within the specified time limit. All these things we studied in the baggage rules. Now, those baggage rules which we studied are again part of the foreign trade policy. So what has those baggage rules provided for? That following are allowed to be imported as part of your baggage without authorization. So what are these items which will not require authorization if it is coming as your baggage? Your household goods and personal goods. Samples which are freely importable under FTP, drawings, patterns, labels, price tags, buttons, etc., 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 up to some prescribed limit. And here the star is any items including some types of items whose import policy is restricted or prohibited or is standardized through ST are not permitted as part of baggage except with a valid authorization. Fine. So basically, passenger baggage, FTP provides that you will be allowed to import items in customs under the baggage rules, that is with all these benefits and exemptions. But what items can be imported as baggage, they have given a list. So as baggage, only personal items or household items are allowed. Second, samples are allowed subject to this condition, and drawing, patterns, label, buttons, etc. So only these items can be imported by you as baggage and get the benefit of baggage. Next, again, if you remember, this was also one of the pointers that was relating to re-import of repaired goods. So when you are re-importing repaired goods, means what you had sent for repairing purposes, after repairing it is coming back. If you remember, in our customs, section 21 was dealing with this. It first said that re-imported items are treated at par with normal import, means normal duty should be applicable, but then it created an exception that where you had sent goods for repair and it is coming back, you have to pay customs duty not on the total value of the goods, but only on the import of the repairs portion. So the customs duty was levied only on the repairs portion. This, if you remember, we had studied in the customs syllabus when we were studying in section 21. Now, what does FTP says? Capital goods, equipments, components, parts, accessories, whether imported or indigenous, except those restricted under this, may be sent abroad for repairs, testing, quality improvement, or upgradation, standardization of technology, and be imported without authorization. So these items which you are sending abroad for the purpose of repairs can be re-imported without authorization. For others, you will require authorizations. Next, goods used in project abroad. So let us say you are undertaking a project which is to be executed outside, and for that particular project, you are taking or you are sending goods from India. So what are the conditions for that? Project contractors, after completion of projects abroad, may import without authorization goods, including capital goods used in the project, provided they have been used for at least 1 year. So let us say as a professional, I carry my laptop and I carry some professional items which I'm going to use over there for my project for which I'm going. When I'm returning back, when I will bring back these items along with me, if I have stayed there for minimum 1 year, that is my project duration is 1 year or more, in that particular case, there will be no requirement of authorization. I hope this is clear. Any questions up to this point? Okay. Now, prototypes. I'm sure you all know the meaning of the word prototype. See, prototype means something which is a demo piece of the actual item. So, if you want to purchase an equipment, you always want to see a prototype of that. So, generally, prototypes are small working models of what would be the actual product. So, that is what is prototype. Now, what is given? New or second-hand prototypes or second-hand samples may be imported without authorization if following conditions are satisfied. First, the importer is actual user, that is, you are going to use it for your own purpose, not as a trader. Second, he is engaged in production of or having industrial license, letter of intent for research in an item for which prototype is sought for product development research as the case may be. So the basic point is, first point says you are going to use it for yourself, not further sell it. Second, you are engaged in the manufacturing or production of those items which require that particular item which you are bringing as prototype. So in short, you have to prove it that this prototype which you are bringing is brought because this will be actually required by you for your own product which you will be making in the future. Further, the importer files a self-declaration to the effect to the satisfaction of custom authorities. So you have to give a declaration of satisfying the above two conditions. Next, metallic waste and scrap. Import of any form of metallic waste. Now you understand what is metallic waste. So we have metals. When those metals are processed, when they are used in some manufacturing, some waste is emerging out of that. That is what is the metallic waste. Or scrap will be subject to the condition that it will not contain hazardous, toxic, radioactive, or contaminated waste and scrap. So when you are importing any of these metallic waste or scrap, you have to ensure that it will not be any of this type containing radioactive material, any types of arms, ammunition, mines, shells, live or used cartridge, or any other explosive material in any form, either used or otherwise. So it should not happen that under the name of metallic waste, you are actually importing things which may be hazardous for the country or the people or the natural resources. So that is why this condition has been put. Fine. Now from here, I'll shift to the module because there are certain things which I cannot uh, be pasted in the slides. So we'll see that from the module. Now, what is the next point is? Next point is about second-hand goods. So import policy for second-hand goods is as follows. So what are these second-hand goods? These may be capital or these may be other than capital. So other than capital can be raw materials, consumables. So for other than capital goods, what are the conditions? Import for the purpose of repair, refurbishing, reconditioning, or re-engineering these goods, freely importable subject to some specified conditions, and goods other than these, restricted for import and can be imported only against an import authorization. So what is this? So let us say I'm bringing a second hand, some type of tool, and it is not capital goods. Now, if this particular tool which I'm importing, let us say a simple example, I'm importing a type of a cloth or I'm importing a type of a chemical, and these are second hand goods. Now, these cloth, these chemicals are not capital goods. Now, firstly, what you have to see, whether it is imported for the purpose of repair, refurbishing, reconditioning, re-engineering, which means it may be imported and resent after doing this. Then it is freely importable subject to the conditions. What are the conditions? That within minimum period you have to send it back after this repair refurbishing is done. Second, remaining goods means you are importing this for your own use, you are bringing it to be used in India, it will not be re-exported because you're not bringing it for repairing, etc. Such second-hand items are restricted. It means you can import it, but only with permission. So whenever second-hand goods are coming, in simple words, there is restriction that it can be imported only with prior authorization, except where they will be re-exported after repair, etc. Now, coming to second-hand capital goods. Now, for second-hand capital goods, there are two categories. First, restricted for import and require authorization and fulfillment of specified conditions. Or second, freely importable. Now, which are freely importable capital goods? One is refurbished, reconditioned spares of capital goods for which a charter engineer certifies existence of 80% residual value. So, where you are importing capital goods which are already used, that is, they are second hand, they will be allowed free. Again, free does not mean free of duty. Free means without restriction, without conditions. When they will be allowed free? If these goods are refurbished, reconditioned, spares of capital goods. So they are not capital goods, they are not machine. They are the spare parts of the capital goods. And secondly, the engineer is certifying that these spare parts are having at least 80% life left. So it should not happen that only 10, 20, 15% life is left and now you are importing it into India. That should not happen. Second, what are the freely importable capital goods, even though second hand? All other second hand capital goods other than those listed above. So all the above lists which we are yet to study, except these list items, other second hand goods are allowed freely. So two things are allowed freely. One, spare parts of capital goods for which 80% life is still balanced, and second, remaining capital goods which are not covered in the restricted list. Now, what are the capital goods which are covered in the restricted list? That is, these can be imported only after getting authorization. So second-hand air conditioner, second-hand diesel generating sets, that is all these generators that we use for generating electricity. So if you have any barat going on the road, the electricity in that barat is by using the generators which are carried along with that, and the generators generally are run on diesel. Then your desktop computer, so laptop is not falling here. Then your refurbished, reconditioned spare parts of refurbished parts of personal computers laptop. So in short, wherever you are importing the refurbished or reconditioned parts of personal computers, that is put in restricted list. Notified electronic items and IT goods. Used IT assets like laptop, desktop, monitor, printer, imported from SEZ to DT. So even what you are getting from SEZ to DT, if it is second or use items, it is put in the restricted list. So for these items, you will see majority are all electronic items. For these items, if you are importing it second hand, it will be allowed to be imported, but with a prior authorization. So they are put in the restricted list. Other than this, the items which are spare parts of capital goods, and have remaining life of 80%, and all balanced goods are imported free. Free means without any authorization requirement. So this is the condition for import of second-hand capital goods. Any questions, students? This was slightly technical. I agree, but unfortunately, that is how this whole chapter is. Anybody having any doubts or conditions? Okay, let us proceed further. So we are still on the conditions relating to imports. Let us proceed further. Now, import of items under advance authorization EOU SEZ enabled without compliance to mandatory quality control orders. And there are too many things in this one point. Let us understand. So now we are talking about the conditions relating to import. Now, what are the import? The import is of items which are under advance authorizations or which are imported by EOU or SEZ. Now, we all know EOU, SEZ. Question is, what is advance authorization? So, advance authorization is what we were discussing right from start, that you want to make export of 1 lakh kgs. For that, you are importing some raw material. Now, firstly, we need the scion to fix that for making 1 lakh export, how much quantity of import is required. So I gave example of 1.1. That is for 1 lakh kgs of export, you require 1 lakh 10,000 kgs as raw material. When you're importing this raw material and you get this advance authorization, why the word advance is used? Because you are taking a prior permission. Yeah, I want to import it without paying the import duty. Why? Because I am going to use it in export. And anyways, if I use it in export and if I have not taken advance authorization later again, you are going to refund me back the same duty. So why not you give me this authorization beforehand? That is, you allow me the permission to import these goods without paying the import duty in the first place. This is what is advance authorization. So where you are importing something which would be used in making of such a product, which would be again exported, you're not going to domestically use it, then those goods can be imported without paying the customs duty in the first place. How that can be done? For doing that, you'll have to first take permission. You have to take that authorization from the customs by complying with all their conditions, filling the forms. And after taking this advance authorization, that is authorization before import happens, so that at the time of import, you will not pay the import duty. And later on, whenever export will happen, you will just match it to them. Ki, sir, see, 6 months back, I had imported this. At that time, you had given me this benefit of importing without paying duty. Now, these same goods are now converted into final product and I'm exporting it. Once that is done, your advance authorization becomes nil. Nil means you have satisfied the condition on the basis of which I had given you this benefit. Now, what are we studying? We are studying some conditions. What are the conditions? The condition is quality control order. What it says, import of items under this enabled without compliance to mandatory quality control order means that these people or this category of import is enabled. Enabled means allowed without meeting the condition of mandatory quality control order. So what is this? Quality control orders are regulatory mandates. So these are regulatory conditions issued by the Indian government to ensure that the products meet specific quality standards. So obviously, as the name suggests, government has given some parameters. So let us say if you are importing some type of metal, it should have this content and it should not have. Similarly, if you are importing some eatable items, it should be having this much of minimum content of protein, etc., etc. And it should not have certain chemicals, this. So this is how the government gives the quality specification. Now, this is what is called as the quality control order. So firstly, they have explained what is quality control orders. Now, orders typically issued by the Bureau of Indian Standards, that is BIS, under the BIS Act 2016 applies to a wide range of products to protect customer safety, health, environment. So obviously, why government has put these restrictions? so that these items which are coming into India should not be in future impacting the life or the health of the people of India or to our environment. Now, domestic manufacturers as well as importers need to ensure that the products covered by QCOs must not be manufactured, imported without compliance with the standards. Obvious. So, like how we have all food items, there are some parameters that if you are putting some preservative, it should be only of this grade and it should not exceed this much percentage of the total weight. Why this is given? Because if preservatives exceed that, or if you are using some more stronger preservatives which are of the ineligible grade, it may severely impact the health of the person who's consuming that food product. Similarly, in medicines also, there are some restrictions as to certain medicines can be sold only with prescription. Why those restrictions are there? Because those may be stronger medicines. They may have adverse effect. Maybe it may cure one disease, but it may have a side effect on some other organ or some part of the body. So to protect your health, to ensure the safety of life or well-being, the government has made these quality standards, which has to be complied both the domestic persons who are manufacturing or if you are importing. Now, enabling provisions have been incorporated FTP for exempting inputs imported by advance authorization holders or by EOU or by SEZ from mandatory quality controls. So as we were discussing from the heading, so these quality controls which others have to comply, others have to meet, but these people when they are importing the same items, they are exempted from meeting the quality requirements for their imports. However, import of units under advance authorization EOU SEZ without compliance to this mandatory QCOs shall be subjected to following conditions. So first, you are allowed to import them without following the quality standards. That is, for your goods, we will not check whether that particular chemical exceeds our prescribed limit, whether you have used stronger preservatives, we will not check. It means we will allow you import without satisfying our quality parameters. But you have to follow or fulfill some other conditions. What are they? Now, you are having that advance authorization whereby you are importing duty free because tomorrow you are going to export it. For you, what are the additional conditions if you do not want to meet the quality standard condition? First, import of inputs under the advance authorization without meeting the compulsory quality standards shall be with pre-import condition. Such input shall be utilized in the manufacturing of the export goods, making normal allowance for wastage, and shall be exported under the same authorization. So this is the basic point. So why we are allowing you? Because anyways you are going to export it. So we have to just ensure that these items will not be consumed in India. So you bring it, anyways you have taken advance authorization that you are using it for export goods, use it. And you have to prove it that the entire quantity which was brought in after adjusting for the normal loss or wastage is converted into final product and it is fully exported. Unutilized imports shall not be transferred to DTA. DTA means local domestic units. So you cannot send it to them because otherwise the goods will enter Indian markets and it may affect our health. So that is not allowed even after regularization of default in fulfillment of export obligation. So even though you fulfilled your export obligation, everything, but if these imports are balanced, so you had imported some quantity and for some reason it is now lying balance, you cannot send it to Indian market, obviously, because we have allowed it to be imported without fulfilling our quality standards. So we allowed it. Why? Because you were supposed to use it in making export goods and finally export it. So it would never enter Indian markets. But even if it is left after meeting all your export obligations, still you cannot sell it in the Indian market. It shall be destroyed in the presence of the jurisdictional GST custom authorities, or you may send it back. No problem. But you don't bring it in Indian market. It should not enter the domestic tariff. And it is logical. Otherwise, it will be breach of our own condition of quality standards. In addition, such unutilized imports shall be liable to payment of effective duty along with interest. So we were allowing you import without payment of duty. That is what is advance authorization. But for such quantity which is left over and which you may be destroying or maybe re-exporting, we will ask you to pay the duty. And since at that time the duty was allowed as exempt, so you have to pay interest from that date till the current date. So both things are against you. One, you cannot sell it into India, so you destroy it, you re-export it. Two, pay duty along with the interest for that period. Now, said exemption shall be specifically endorsed in the advance authorization upon the request of the authorization holder. The exemption from QCO will be available for physical exports only, and such exemption will not be allowed for deemed export, because again, deemed export is entering into India. I already explained you what is deemed export. You are selling domestically, and that person may be utilizing it for future export, but who can control so much? So it is not allowed for deemed export. Yes, you are exporting it yourself, allowed. If you want to sell it to some other EOU or SEZ who will further use it in their export, not allowed, because we cannot control them also. So that is why you have to use it yourself or you have to re-export it. Those are the only options. You cannot sell it domestically, not even in case of deemed export. Further, import of inputs without compliance to the mandatory quality standards under DFIA scheme is not allowed. That is okay. Now, for EOUs, what are the additional conditions? So again, we are allowing EOU to import these materials without fulfilling the quality standards. But anyways, EOU are again going to do what? They are going to export it. That is why we have allowed them. And you will find similar conditions as like the advance authorization holder. What are they? Exemption from applicability of the mandatory QCOs issued under the BIS Act shall be provided to EOU on import of units which are required for export production. Again, no DTA clearance of such inputs or goods manufactured out of such inputs are allowed. So neither the same imported inputs can be sold in DTA, neither goods made out of those imported inputs can be sold in DTA. Logical, because we cannot allow those goods to enter our Indian markets because they have not satisfied our quality parameters. We still allowed you to import because you are going to use it in export goods and re-export. So please understand, students, all these pointers, they may sound very technical, but they are very logical. See, I do not want to affect our trade also, because if these goods are required in foreign market, maybe for their standards, they may be allowing these goods with such a high content of any item. But in India, we are not allowed. Like for example, even in foreign countries, you are freely allowed to use different types of drugs which are banned in India. You are allowed to consume alcohol, which is banned in India. You are allowed to use pistols and keep pistols in India. That is not everyone is not given the license to use or keep pistols or even weapons. So every country has their own norms. So we are okay with other countries are allowing those goods to be entering into their country and being sold domestically. We are not allowing, but it should not also hamper the trade. So we are allowed to import, obviously in only that condition that it will never enter our market. It will be used only for making the export goods. So for EOU, same condition similar to what you saw for advance authorization, that these goods cannot be cleared in the domestic market, and neither they can be used in manufacture of those goods which will enter the domestic market. Both are not allowed. Further, an undertaking to that effect will be submitted to the customs authority by the EOU at the time of importation itself, that they will not make these goods enter the domestic market or the final product enter the domestic market. So they will be giving such a declaration to the custom authorities at the time of importation, and a copy of the same will be submitted to the development commissioner, etc. Now, the exemption from QCO will be available for physical exports and again not allowed for deemed export for the simple logical reason I explained earlier. Now, for SEZ, again, exemption from applicability of the mandatory QCO issued under the BIS Act shall be provided to SEZ on import of inputs, which again are required for export production. So you'll find this copy paste with EOU condition of same. No DTA clearance of such inputs or goods made out of such inputs are allowed. And an undertaking to that effect will be submitted to the concerned development commissioner of SEZ by the SEZ unit at the time of importation. Further, exemption from QCO will be available only for physical exports. copy paste point because the logic is same. Understand the logic, you'll understand the point simply. Now, above exemption shall be applicable only for the list of notified ministries departments whose notifications on mandatory QCO are exempted by the DGFT. Above exemption of not meeting the QCO will not be allowed for all goods. It will be allowed only for specified list of notified ministries of department. So it is not the case that every goods which is having some restriction of quality can be imported by these three people taking the benefit that, okay, we are going to use it in export. No, only the goods which are notified by the respective departments or ministries can be imported by these three people, ignoring the quality conditions. I hope this is clear to everyone. Now, coming to some miscellaneous provisions or conditions relating to import, some of the provisions are: goods for import into India can be sold on high seas subject to FTP or other laws. Now, what is high sea? High sea is, let us say your goods are on ship before they enter into India. Let us say you and me both are also traveling by the same ship. Before the goods enter into India, I sell the goods to you, which are still lying in the ship. Now, we both may be on the ship or we may both may be in India, but my goods are still in the sea. That is, they have not yet entered our territorial waters of India. So they are in the sea, which is called as high seas. While the goods are still in the sea, I can sell the goods to you. This is called as high sea sales. So first point is, goods for import into India can be sold on high seas. That is, even before they land into India. Simple. Subject to conditions and laws in force. Second, merchant trade. Merchanting trade means shipment of goods from one foreign country to another foreign country without touching Indian ports, involving an intermediary. This is allowed subject to RPI guidelines except for goods in this category. Now, what is this merchanting trade? I'll give you a simple example. I get an order for a particular type of textile product from Europe market. I am not manufacturing it or I'm not able to manufacture it for any reason. So I look out for another person who is manufacturing the same thing, and I find the person in Bangladesh. So Bangladesh person is my supplier and my customer is the Europe based persons. Now what I have to do is I have to purchase the goods from the Bangladesh manufacturer and sell it to the Europe based customers. What I do is I do not physically bring the goods into India. I can directly ask the Bangladesh manufacturer to dispatch goods to the Europe customer. I can do that. If I do that, then it's called as merchanting trade, where I am the Indian intermediary. That is a link between the two. And most important, these goods are not touching Indian goods. That is, they will not come to India directly from Bangladesh. They would be sent to the Europe market or the foreign. So for such things, such type of trade is allowed. This is what this point says. Obviously subject to RBI guidelines because foreign currency is involved. And this is restricted for these two type of things. One is CITES and the other is COMET. What is CITES? That is explained. Conventions on International Trade in endangered species of wild fauna and flora. So for certain types of flowers which are coming in the endangered species, this is not allowed. Other than this and other than comet items, for all other items, you can do this type of merchanting trade. Ginny is asking, sir, then we will become third party for this transaction. Okay, beta, you are third party or you are the second party. Now, first is Bangladesh, third is Europe, you are the second. So it makes no difference. You call yourself as second party, third party. That makes no difference. Now, further, merchanting trade carried out within one specified foreign country is also permitted. Now, this is interesting. What is this? Merchanting trade carried out within one specific foreign country means I am buying from a person in Europe and selling to another person in Europe sitting in India. Now, this is something may not be possible always, but at times it may be possible. So I am purchasing from a person who is in Europe and also selling to the person who is in Europe. So I am doing the same merchanting trade within one specific foreign country. That is also allowed, except again for CITS and SCOMET items. Next, import of capital goods under lease financing does not require any specific permission. Now, what is this? See, one is I can purchase the machinery myself, but the machinery is very costly. Now, my first option is I can go to the bank for taking a bank loan. First option. Second option is we get people who are financiers. They are people who are very rich and they are in the business of lease financing. What is lease financing? Instead of going to bank, I'll go to this person. Hey, boss, this is the machinery which I require for business, which I cannot purchase. You do one thing, you purchase it in your name. That is, you buy it, you become the owner, and you give it to me on lease. So I will get the machinery for using it in my business. I will pay you the lease charges. But since I do not have the money to buy, you become the financer. So instead of I going to the bank, taking the bank loan, mortgaging the machine and all, instead I'll do simple. I'll come to you. I will ask you to buy the machine. So you purchase it in your name and you give it to me on lease. So this is also allowed. That is, you can import goods where you are not the owner, but you have bought the goods where somebody else has purchased and given to you on lease, which is the lease financing method. That is allowed in case of import. Next, for imported goods, bank guarantee, letter of undertaking, or bond is to be executed with customs in case of duty-free import or otherwise required before clearance of goods. For indigenously sourced goods, an authorization letter has to execute LUT, bank guarantee bond with the regional authority concerned before sourcing such material. So simple is whenever you are importing goods from foreign country and you want to get it duty free means under any of the schemes, the simple requirement is you will have to give any of this to the customs so that it will be a security with them in future. If you do not satisfy the condition, whatever they want to recover from you duty penalty, that can be recovered from this particular thing. So that is a simple thing. Now, some provisions relating to export. So now we firstly saw general provisions which were common to import export. Then we saw provisions relating to import. Now we are on provisions relating to export. All goods may be exported without restrictions, except to the extent that such exports are regulated by the ITCHS and or other provisions of the FTP or other provisions of any law for the timing imports. So in short, general rule is you can export freely without any restriction prohibition, except where it is specifically restricted. Simple. Now, in relation to this, what are some specific points? Benefit for supporting manufacturer. Supporting manufacturer is the one who manufacture goods, products, or any parts, accessories, components of goods products for a merchant exporter. Merchant or manufacturer exporter under a specific authorization. So firstly, understand who is a supporting manufacturer. So I will use another word which I'm sure you all would be knowing. It is like job work. So you are the person who are the actual manufacturer exporter. You want to export certain thing by manufacturing it, right? But maybe you may not have all the facilities, capabilities to manufacture it. So you enter a contract with me where I manufacture that thing for you and give it to you and you sell it. This is what is where I am called as the supporting manufacturer. So who am I? I am the one who manufacture goods, parts, accessories, components for you. Who are you? You are the merchant exporter or the manufacturer exporter having the specific authorization. So many times where I am also not having authorization, but I want to export something, I can use you as the person where I sell it to you. You become the merchant exporter and export it because you have that authorization. Now, for any benefit to accrue to the supporting manufacturer, the names of both supporting manufacturer as well as exporter manufacturer must figure in the concerned export document. So this is very important where I am the supporting manufacturer and I want to take any export benefit. Plus, anyways, you are the main manufacturer, you have to take the benefit. If we want that both of us get the export benefit, both of our names should appear in various documents like the invoice, most important shipping bill of export, because these are the main export documents. So whenever you are filing the export documents, you have to be very, very particular that you do not miss out the name of the supporting manufacturer. Otherwise, that person will not get the export related benefit. And if he is not getting, then whatever he has supplied to you, and you are the main exporter, for you it will become costly. Because if I am not getting the export related benefit, obviously my goods would be having the duty component, which may become a cost for you. Then comes the second point, third party exports. Third party export is also allowed under FTP. What is third party export? It means export made by the exporter manufacturer on behalf of other persons. So it means what? I got the order, but I am a small person. I don't have the experience or knowledge of customs. I don't know how to do any type of packing or transporting or following the port and the warehouse procedures. So what I do is I come to you, you are a bigger exporter. Regularly, you keep on exporting goods. So I request you that along with your lot, you export my goods also. So this is what is called as third party export, where exports are made by exporter manufacturer on behalf of me. I am the main manufacturer, main exporter, but I cannot export it myself, so I route it through you. In such cases, export documents such as shipping bill, etc., shall indicate again the name of both, that is the person who is exporting and the third party exporter, and the bank realization, self declaration form, export order, and invoice should be in the name of third party exporter. See, I am the main person. So majorly all documents should be in my name. Only I have taken your help because I myself cannot directly export it. I'm exporting it through you. So the main export documents, that is the shipping bill and all, should have both names. But remaining all other thing anyways, because I'm going to get money. So the bank realization certificate should be mine. I should be filling the self-declaration form because it is my goods. So all other documents will be in my name because I am the main manufacturer, exporter. But I cannot export myself. So I've requested you that along with your goods, you export my goods also. So your name will appear only on the export document, that is shipping bill. Remaining all other documents, it would be only relating to, and that is logical. Samples. Export of trade and technical samples of goods of freely importable items are allowed without any limit. So earlier we studied the same point in import also, but over there was restriction that samples could be imported, but with some restriction. Here, if I am an exporter and I want to export trade or technical samples, they are freely importable items, they are allowed without any limit. So here there is no limit, what we read in case of imports. Goods, gifts. Goods including edible items of the value of up to rupees 5 lakhs in a licensing year, which is 1st April to 31st March, may be exported as gift. However, items mentioned as restricted for export in this shall not be exported as gift without an authorization. For gift, again on the import side, if you remember, it was clearly written that import of gifts is prohibited except of Rakhi, and that also subject to some limit. Beyond that, Rakhi was required to be paid or tax paid. However, in case of export of gifts, there is not much restriction. So export of gifts is allowed, but again, except for the restricted items. Again, passenger baggage. At the time of import, we studied that passenger baggage, certain items would be allowed to be imported as passenger baggage. One was your personal or household goods. And then two, there were two specific goods which were allowed to be imported as passenger baggage, getting all the benefits of baggage rules. Now, for export, what is the condition? Bona fide personal baggage may be exported either along with the passenger or if unaccompanied within 1 year before or after the passenger departure. However, items mentioned as restricted for export shall not be exported as gift without an authorization. Samples that freely exportable can be exported as part of baggage. Authorization will be required only for restricted items. So same logic, for restricted items only, you will require authorization. Other than that, remaining things can be sent as part of personal baggage, which may be samples, which may be gifts, but it will be subject to authorization. Import for export. Goods that are freely importable as well as freely exportable can be imported and then exported in same or substantially the same form without any authorization. So where there is no restriction on import and export, so you are simply doing trading, you are bringing the goods and you are exporting the same thing, or with minor changes, maybe putting some of your tag or slightly changing the packing, you are exporting it. Then where it is not having any restriction on import export, there will be no requirement of any authorization. Second, goods including capital goods, both new and second hand, can be imported under the customs bond and then cleared for export against freely convertible foreign currency, provided they are freely exportable. This includes goods that are restricted for import. Now, what is this point? Goods, including capital goods, both new and second hand, can be imported under customs bond and then cleared for export against freely convertible foreign currency. Means what? So where you are importing some items which you are importing for clearance as export only, we will allow you to do it without any problem. The only condition is give us a bond. Why this bond is required? So that in future, if by chance you do not satisfy any of the conditions, we can take an action. So the point is, import with the condition that you are going to export is allowed, and that will be allowed only by taking a custom bond just for a security that tomorrow you are actually exporting it. This also includes items that are restricted for import. Now, see, I have no problem with the items which are restricted for import. Why? Because you are already saying that you are going to export it. So even if you are importing the restricted items, I will allow it without any problem. Why? Because you are going to export it again. So for me, yes, beta, Genie, you can say it is like warehousing. So for me, it is not a problem. Anyways, even though it is restricted, you are going to re-export it. So I'm okay with that. Next, capital goods that are freely importable and freely exportable can be imported for export upon execution of the LUT or bank guarantee with the custom authorities. Further, notwithstanding the above, the goods of other than Indian origin that are restricted for export, other than prohibited or SCOMET items, but free for import, can be imported for export in same or substantially the same form. So same point, beta. Understand this, where there is no restriction on export, but there is a restriction on import. What we studied above, if there is restriction on import but no restriction on export, we will allow that import freely because anyways you are going to export it. Now, the case is opposite. What it says, goods of other than Indian origin that are restricted for export but free for import can be imported for export in the same or substantially the same form. So where I have put some restriction on export, but they are allowed to be imported freely, can be imported for export in same or substantially the same form. So earlier above it was the opposite. It was restriction on import but free on export. Here it is restriction on import but free on import. Except for SCOMET or prohibited items, we will allow you to do this, and such goods shall be kept in the bonded warehouse and re-exported from there subject to the provisions of the Customs Act. Goods that are imported against payment is in freely convertible foreign currency can be exported only against payment in freely convertible foreign currency. So I want that if you have imported by paying foreign currency, you should get back the foreign currency. So on either side, it should be with freely convertible foreign currency again, unless otherwise notified. And then the last point is payment and receipt on import export. Denomination of export contracts. Export contracts may be denominated in Indian rupee or freely convertible foreign currency, but export proceeds should be realized in convertible foreign currency only. So your contract, you may enter into rupees also. But the realization should be in foreign currency. However, there is some note. Freely convertible foreign currency refers to currency that can be exchanged or converted into other currencies without significant restrictions. This is anyways, we know the definition of freely convertible. Now, what is the exception to this rule? That you compulsory need to get the money in foreign currency only. There is exception. However, in specified cases, export proceeds may be realized in rupees subject to fulfillment of specified conditions. The best example is after the Ukraine war started, many foreign countries like US, European countries put sanctions on Russia, because of which Russia could not directly export to them. So what we did, we started buying the things from Russia, like the energy, the oil, and started converting it into the products, and we started selling it to Europe. Now, in this case, we also cracked another deal that we entered this transaction in Russia in Indian rupees. That is, we asked or we told Russia that we'll be buying your oil, but we'll be buying it in Indian rupees and not in foreign currency. So there could be certain exceptions to this rule. Otherwise, the rule is it should be in foreign currency only. Non-realization of export proceeds. If an exporter fails to realize the export proceeds within the specified time, he shall be liable to return all the export incentive benefits. This is the rule in all taxes, income tax, GST, wherever you are exporting and taking the refund of these taxes. There is a time limit, 6 months, 9 months, within which you have to get back the foreign currency. If you fail to do that, you will have to return back the benefit. Export credit rating agencies. What are these? These provides financial support to exporters. Sorry, I use the wrong word, rating. It is not rating, it is export credit agencies, that is like banks. These are there to provide financial support to exporters. They support the exporters how? By insuring them or providing guarantee and also direct lending. So one, they will give them insurance that in case anything happens to their goods, we will pay you. Second, they will stand as guarantee so that people can have faith in them and do business with them, or they will directly give you finance wherever you need money for doing the business. For instance, Export Credit Guarantee Corporation of India, Exim Bank, etc. Now, another concept is export promotion councils. Now, what are these? For different goods, there are different bodies set up by the government who are dealing with helping the domestic manufacturers to export their goods. These bodies are called as export promotion councils. So they are organizations of exporters set up to promote and develop exports. So they will work with the domestic manufacturers to help them export their goods. That is why their name is Export Promotion Council. Each council is responsible for promotion of a particular group of product, projects, or services. These councils are also eligible to function as registering authorities to issue registration cum membership certificate. So those who want to take the benefit of this, they will have to first become my member, and on becoming member, I will give you this certificate. Now, this certificate is required to be furnished by that person applying for authorization for the import-export under the FTP. So all the schemes under FTP are linked with IEC, and also for getting the authorization under the FTP, they ask you to be member of some export promotion council so that they can have a better control on such persons. So wherever you want any authorization and you apply for the authorization, they will ask you to first become member of the export promotion council to which your goods belong, so that they will have much better control on you. Then comes the next concept of self-certification of origin of goods. Till now, certificate of origin of goods for export was issued by designated agencies. However, now self-certification has been enabled for approved exporter. Now, who are these approved exporter? If you remember, we studied a concept in our PPT that was relating to those people who are given the 1-star, 2-star, 3-star, 4-star export house ratings. Now, once you fall under those export ratings, you are allowed to do self-certification if you are in 3, 4, or 5 export rating category. So these are those approved exporters who are allowed to do self-certification. That is, they can themselves put certificate on their goods that this are of Indian origin. And why to do this? So that when they are exporting it to particular countries, they will get the preferential rate of those countries. Further, approved exporters will be entitled to self-certify their manufactured goods as originating from India with the view to qualify for the preferential treatment under the different preferential trade agreements or under free trade agreements or under comprehensive economic cooperation agreements, comprehensive economic partnership agreements which are in operation. Self-certification will be permitted only for the goods that are manufactured as per these issued by the manufacturers. Yes, beta, it is status holder, correct. It is a status holder having 3, 4 or 5-star rating given to them. Fine. Excellent. So today we have completed the unit 1, which was dealing with the entire FTP as a concept. Now, our next lecture would be very interesting because in this you are going to study the actual schemes which are there under the FTP. We'll understand those different types of schemes. Some are giving you return of refund of your taxes paid. Some are giving you some type of export concessions. Some are giving you some type of subsidy. Some are giving you some credit rating. So all these schemes which are under the FTP, we are going to study, and these schemes are the ones which, as I mentioned, will be asked in the exam. So very important from exam point of view. 1, 2, these are the schemes in which tomorrow you can do your profession and have a great career. So with this, we conclude our today's lecture. In case you have any questions or doubts, you can always put me the doubts. And yes, again, I will request that please read from your module. It is comprehensive. It covers everything. What is your question, beta? Sir, today I can relate much points that we will see in news. Exactly. Exactly. So this chapter, as I mentioned at the start, is also very important because now we as professionals should also be updated with what is happening in geopolitics because it is having a direct impact on our economy, on our trade, on our future taxes, on our future policies. And I'm sure with this chapter being done by you, studied by you properly, you will be able to understand many things that you will get to read or listen or watch in news. So with this, we complete our first unit of this chapter. And in the next lecture, we'll discuss the second part. Thank you, students. Have a good night's sleep and please study well. Thank you. Take care. Thank you. Good night. Thank you, technical team. We can close our lecture today. Good night, technical team. Bye-bye.